Today I'm teaching my brother how to start day trading with just $4. But instead of a normal tutorial, I'm literally walking him through everything live, setting up his account, showing him how to actually read the market, how to grow a small trading account just starting with $4, and then answering every beginner question he has along the way.
That was one of my questions going back, that can resistance levels become supports, like floors?
But more importantly, I'm focusing on what actually matters, step by step. So he doesn't get overloaded trying to learn everything at once. He learns things in the proper order. I've never made a video like this before, but if you follow along, it's going to give you a much better foundation than most beginners have, and most beginner trading videos give you, even my own. So let's get my brother and you set up the right way to become a consistently profitable and confident trader. So yeah, this is the trade I took, 2 days ago now at this point. And it's like, this is basically what I'm just trying to do every morning, is looking for the market. This is Eastern time. My charts are always in Eastern time now. So it just opens here at 9:30.
Yeah.
And then ideally, looking for, I'll just get out of this so it doesn't, like this big move down into a spot where it looks like it's going to reverse. And then looking for, because that just gives you much more room for a trade to play out in your favor, and you can have small risk reward. I always find trying to stay with the trend. If you think it's going to continue down here, it's really hard to understand where the risk reward will go. There's not an easy target, versus here, and we'll talk about later, it's very often you can say where this move started is where, if it reverses, it'll end. So that's super easy target and easy to figure out your risk reward. And
how much room you have in it.
Yeah, and so you can do the math and everything. And so, it's just spotting that unhealthy move and then kind of looking for a bottoming pattern that we'll get into a little bit later. And then just kind of trying to ride it out and manage it. And, I don't want to get too into entry and managing, but just kind of this is trying to repeat this consistently every day, and looking for just this one thing has made it super simple for me and a ton of other people in just being able to master one thing versus trying to
do it consistently.
Get bogged down in so many different styles and everything. And so this is pretty much where it got knocked out. And this was way longer than normal. Usually my trades are 20 minutes. But I think this yellow line, I think I drew that later, but just to look at the target, I guess, 6,965 is...
That number on the side, that's ticks?
The points, I guess, yeah.
Points? Okay.
Technically points. Ticks would be the main...
The little sub ones? Okay.
Yeah, between. This 0.25, that's a tick.
Got it. And those are always in 0.25s?
Yeah, for the ES.
Okay.
But so, I want to try and figure out and teach you the best way to approach this in a methodical way that you can slowly build up. Huh?
That I can reproduce.
Yeah, and that you can slowly, because I think there's so many ways to get distracted, and trying to focus on the key pillars of what makes a profitable trader. And it's easy to get bogged down in the candlesticks and stuff, and try and enter and manage a trade perfectly, when there's really the first most important thing is just looking for this first week. I think the best thing for you to do is we can just start to teach you, and you can practice literally just looking at major trends in the market, because the final entry of where you jump in doesn't really matter if you can't pick the general thesis that it's going to reverse here. If you're wrong about that, you could enter in here and it could be great, but it could just reverse at some point and continue going lower. And that's understanding the big picture.
One of the notes I took from going through your course earlier this week was you're talking about 1 minute versus 5 minute charts, and how the 5 minute chart really just reduces a lot of the noise. It's if you're looking at it too closely, you're going to get too much noise. I thought that was helpful for trying to identify the larger patterns or moves.
We'll definitely use that and look at that in a second. I mean, I think even here, this kind of noise here could get you in trouble. And there's definitely other times, in choppier markets, where you can start looking at it too much and get sucked in and think it's something could happen, and really it's just you should stay out, which is why going to the bigger trends can be helpful.
I have a question on the first 30 minutes. I guess so. one of the things you were talking about earlier was an unhealthy move. I'm wondering how much in the first 30 minutes is that an unhealthy move or just the market figuring out what it's doing? Because I know you talk a lot about 30 minutes after opening, so at 10 a.m. roughly, it makes a change in momentum or trend.
Yeah.
And so I'm wondering how much of it is like that first 30 minutes here, is that unhealthy or just the market figuring out what it's doing and then it reverses?
I mean, I think what we're gonna go over later is like will help with that
Okay.
is how to like identify, okay, how do you tell the difference between this being a healthy trend or a strong trend
Yeah.
that it's gonna fail and reverse here versus continue to go down. And obviously,
Yeah.
like you can't predict that every time, but there's definitely like good signals and reasons to be able to try and predict that. Like the other important thing of this first week is like just getting used to the schedule.
Yeah. Yeah.
Just getting used to the schedule of, I kind of wrote it down here a little bit of like opening your charts like 15 minutes before the market, which would be, 9:15 Eastern Standard Time. So then in those first 15 minutes, it gives you time to kind of just look at, the major swings of the market, like what's going on kind of thing. I've seen like, okay, what overnight or in the past like day has the market, if it's Monday, like in the past weekend, like what has the market done? And so like, where do I see kind of the main levels and moves that have happened? So I can look at kind of the big picture going into the day. So you can kind of figure out that bias. And then as well, I like to, where's this chart at? This will work. Drawing those major swings and then going into, I'll just, because it's the weekend right now, but go into when the market's going to open. I like to draw vertical lines at just the 15 minutes after the open and like the 30 minutes after the open. So 9:45 and 10 a.m. because those are key news times where the market will do something a lot of the time. And just like, so it allows you to, again, like put like easy visual thing on the chart that'll, as you watch, like, the candlesticks come up into that area, you can say, okay, it's hitting this. I can kind of like, I know that's a spot where something could potentially
It's
happen.
more likely to do something there.
Yeah, I find that it really helps me like stay more focused on, the strategy you're trying to execute versus just reacting to the market because that's such an easy thing to get into of just like reacting to the market versus waiting for it to come to you.
Yeah. Well, yeah.
Yeah,
Uh,
and then the idea is you're probably going to be at the charts for like an hour at least, like until, 10:15 Eastern, just because that gets it to that 10 a.m. time, where that it's likely to do something, and then a lot of times either the move will happen or you just won't have a good read on the market, or it just won't be a good market.
yeah.
And I like to then just kind of be done with trading for the day because you've come in, you've looked for, your specific strategy and that time window of opportunity. And then if it doesn't show up, the idea is just moving on for the day versus trying to stick around and like force something to happen.
Do you ever look at it like 2 hours later just to see if it's like similar to looking at it at like, I guess what would it be 6:15 my time, so 9:15, like 15 minutes before they open, just look at it like a couple hours later just to see if it's changing or resetting up or like market behaviors.
The other like last main reversal time, I would say is 11 a.m. Eastern. So you could, if something doesn't happen at 10 a.m., you could, be done at 10:15, go like for a walk with your dog for like 45 minutes,
Yeah.
come back, get some food or whatever, take a break basically with the idea that I'm going to take a break.
Reset my brain.
Yeah, reset your brain so you're not just staring at the charts and getting impatient and more likely to just do something stupid. But then you come back and you're following your plan of like, okay, I'm just gonna see has the market, yeah, like you're saying, has it, come up to somewhere at 11, which would be all the way here, and it's like, okay, has it done something? Because that's, an hour of time, a lot can happen.
Yeah.
And that's just the other time where I've noticed that it can kind of top out and reverse or change. And then after that, like, I mean, there's people that trade all day, but I always find that it's easier to trade for a shorter amount of times because you can kind of be laser focused and you're not going to overdo it. And, like you say,
Yeah.
just like
You're not
start
gonna
being,
burn out.
yeah, because it seems a lot really easy to think about it, but then when you're actually doing it, there's just so many micro decisions you're constantly making that it's just super draining. And even just the micro decisions to stay out and do nothing is still very draining.
Yeah.
And I think another thing about that first week is I guess this is like working on not
Staying
actually
focused.
doing anything while you're trading. Yeah, like
Yeah.
not like going and doing, I don't know, looking at something else on their screen, like either like I used to, play video games, watch YouTube, or even like do some work related thing. And there was so many times where I'd look back at the chart and I would have missed something, or I would
Yeah.
think I was about to miss something and do an impulsive trade because it's so much easier to FOMO and think oh, this massive candle just popped up and I'm going to miss something because you're not really thinking about the market and thinking, oh, that if I see a big candlestick here, I think it's a bait or something.
Yeah.
Um,
Yeah.
and I still like what I do is like well, I think trading like a short amount of time makes that easier, but then also like listening to music or like trying to find that fine line between something that kind of keeps you occupied, but your brain can still be thinking about the charts in a way.
Yeah.
Like either music or like stretching or doing push-ups or something versus like, and I stand at my desk. I think sitting is way easier to kind of just get in more kind
Distracted.
of, or
Yeah.
just like sluggish and not engaged.
That makes sense.
Yeah, any like questions on like schedule or any of that kind of stuff?
I don't think so. It definitely will be the like hardest initial hurdle for me
Yeah.
because being on the West Coast and not being a fully committed morning person. But no, I mean it's something I've
Yeah.
known. It's something I like. I would like to wake up earlier anyways, so this just gives me a better reason to wake up rather than just waking up for the sake of waking up.
Yeah. Oh, go ahead.
Yeah, no initial questions on like scheduling or
Okay.
schedule.
I don't know like a rough time, but like I think, I think this depends for every person, but like waking up with enough time to wake up before trading. So it's like I had to struggle on the West Coast too with like, okay, if you wake up an hour before market, that's 5:30. That blows.
Yeah,
Like in an ideal world, going and doing like a workout before trading just to get your blood really flowing would be sick. But
10 minutes,
yeah.
kettlebell thrusters.
I mean, honestly, like I definitely think it's ideal. Like I've even done here of like going for a run for like just a mile,
Yeah,
like just something to get your blood going and get you kind of awake. And sometimes I don't do that either. Like I just kind of get up, but like giving yourself at least like I think 30 to 45 minutes before the market opens is ideal.
yeah, just to fully wake up.
Yeah, and of course that's kind of like person dependent. Yeah, and I think what we can do next is try and just get charts set up and like talk about charts and talk about trends and like what you should try and be focusing on and reading in the first week or two.
Getting it set up would be super good because I
Yeah.
followed along a little bit with one of your tutorials, but then I was like, this seems far ahead from what I should be doing.
Yeah, yeah, no, we can totally go through just like a simple one. Do you have the link for, or do you have like an account already set up?
I have an account already set up.
And we're just going to use NinjaTrader for anyone else that wants to use what we're using too. I'll just leave a link for it in the description below. And we're technically going to be trading futures, but honestly, like we're not even going to talk about that in the first week or two because I think you don't even, it's like charts are charts. Like you can use this kind of stuff on anything. You don't need to, really get into the nitty gritty again. It's trying to focus on the big picture first. I'll try
Do you want me
and
to share my screen or
I'm assuming you just have a blank slate, right? Like you
I
just have this
have,
window. Because
so
you can just follow along and I can just do it, which will probably work too.
okay, I see which window that is. I have that window pops up and then like four other little charts pop up every time.
Okay. I think you can try and close those out.
Okay,
Let's see. Try and I think do close those out and go to workspaces here and click new.
workspaces.
Because I think this will help like set up
Okay, yeah. What should I call it?
I don't know, whatever you want. Because I think that might actually reset everything and make it like a new workspace. And all you need to do is just go to new up here and then chart.
Yeah,
And that kind of like pulls up this window. And then there should be a drop down menu here. I don't think you'll have these. So you want to go to futures and then you can just go to ES and it should have a number next to it. That's just like the expiration month.
okay, yeah, I have ES December 25.
Okay, you can just click that and then you can always just like write in. You can just delete this and write in 03. Maybe not here. Oh yeah, it does work. Yeah, you can just literally just type it in. normally like NinjaTrader will give you a prompt to automatically roll over, so you don't really have to think about it because it'll expire and go on to next a different contract number.
Okay, I have ES December 25. Which did you rename?
I literally just clicked on this box right here and just deleted it and typed in ES 03-26 and press enter.
When I do that, I get a little weird data is delayed box next to it.
Oh, it's because your free trial
I
ran out. I
my
would think they
trial
would
ran out,
probably if you made your account like,
but
weeks
I'm
ago or
just
months ago.
I opened this under sim
I don't,
groups.
well, with your delayed data, I don't know why it would
I think
put you
some
in
of
a
it said it
hold like
was
that. I don't know how that works.
there's like a 15-minute data delay.
Like that should be fine. You should still be able to select this correct instrument though. Do all these say 12 instead of 3?
If I go to futures,
Yeah, they all 12, 20 or 12, 25.
ZW, ZN, ZB, those are all 26. GC's 26. CL 20, Jan 26. My ES is December 25 though.
What about your NQ?
NQ December 20, same thing.
I mean, maybe you just have to go get data. I mean, you're gonna have to do it at some point anyway.
Yeah.
So just go to ninjatrader.com and log in.
But what if I told you I don't see that?
Okay, go up
What do you want?
here and go to settings. I was just in the old, yeah, it had the old
Okay, I
style
see
and
it.
then it said open legacy. Yeah, yeah, yeah. I know it looked a little funny actually. Yeah, so go to settings first and then you'll see up here and
Yeah, yeah,
your
yeah. Okay.
plans. Okay, and then you probably won't see all this because this is mine set up.
Oh, I have market data. It says CMB bundle level one, status inactive.
Well, how much does it say it is?
That one's $12 per month. I also just
Okay,
have account plan.
you should be able to, yeah, if you find like the subscription, you should be able to, can you get to this page when you click like manage subscription?
That's for market data subscription. Okay, yeah.
Yeah, yeah, yeah. Yeah, I have an update subscription, but it should be some kind of like market data subscription.
Yeah, it looks like I
And
subscribe to it.
yeah, but then it gives these, go click here, go to just the customize drop
Oh
down
yeah.
here, and it
Yeah,
puts
okay.
all this because then you
Pick and
should be able
choose.
to, yeah, you should be able to just do this one, CME, for $4 per month. Let me just double check. I always get these mixed up. Yeah, so this has the ES and the NASDAQ, and I don't think it has, if other people are like wanting to trade gold and oil and stuff, you're gonna have to do, I think, COMEX. I think this has, yeah, this has gold, silver, all your like minerals, and then oil actually might be in a different one. So if you just, yeah, like if you need to do all of these, like I'm subscribed to just this one for 12 a month, that's just all of them. But if you're just like for you now, like it's better to just start on,
Yeah, that sounds like a problem for later.
yeah, like it's better to just focus on just like the ES and the NASDAQ. And I think I've slowly over time just doing like I'm just doing that because it's just again simpler is always better. So like you can easily just $4 a month is super cheap for data. A lot of places charge you more.
Oh, I just want ES, right? ES March 26.
Yeah, so you got this finally. It says now that you updated it, you can just see this is all
Yeah.
like '03.
New charts, ES 26.
Because if
Okay.
not, another thing to do, if it you can go to tools here and go to database management. Under tools, just database management. It's like the third one. And you can click this rollover button. If there's some that are like not updated. Generally like it'll automatically do it. And so you won't really have to do this. But if you ever like need to, it's an easy way to do it.
Okay. I've opened a chart. Um,
Oh, you weren't supposed to open a chart yet.
I've closed a chart.
There's still some stuff over here we have to
Wait, I
do.
don't see, where do I see that now?
What?
That screen. So
The d-
if I go to my workspace and hit I named it Trading with Riley. How do I get to that screen that you're on?
This one? It should just, you're gonna have to go down to like on your tabs because it's a different window.
Okay, it's different.
Like
Oh,
if you,
you're under accounts. Okay, gotcha. Okay, I'm there.
oh, I mean, like, yeah, this doesn't really matter. Like, you can just, it's just the top things are the same. That's all you really need. Okay, yeah. So we're here. We have this selected, and this is like how you open a chart generally. And generally, it's like this is just like it's a minute chart, and
I'm
then
sorry. I'm gonna be.
what?
Oh, you're just under data series.
What are you looking
Okay,
at?
okay, yeah, no, I see what you're talking about. Okay, I'm there.
I guess first it's like we can do like a 15, change the value to 15, so it's a 15-minute chart.
Yeah,
And then days to load, I like to just do 50.
yeah.
And then I think just this should automatically say, does this automatically say use instrument settings?
Yeah.
Okay. I like to click break at end of day, that little toggle button below it, if that's not.
Yeah.
You have to kind of tell me if these are different. I don't know, bar width, I think that's probably normal. And then the colors, I changed to basically have up bars be white and down bars be blue versus, and then the outline of the bodies, I think you might have to change that too, just to simple like white or something. And the idea with having them, a different colors, those are a lot more calming. Like having red and green candlesticks is very emotionally triggering. It just
Yeah.
helps keep it to where it's like just red and green are just very emotional colors. And so reducing as much triggering input as possible really helps. And I think that should be it. Other stuff like it's just you can just press OK and that should open up a chart like this.
Yeah. Mine looks the same.
Okay. You need to right click just anywhere on the chart, then pull up properties.
Yep.
And then, so just like, there's not too much on here, but like right side margin is how much space there is right here between
Yeah.
the chart. So like if you want more space there, it's kind of just personal preference. Like visually, you can change this so it's like it automatically forces a lot of space to be on the right side. I usually have it at like, I don't know, 300, 400. Again, that's some like preference you can kind of change over time, but
Okay.
300 is like a good. Just visually having a little space there is kind of nice, I
Yeah.
think. And I think the other main things is just these grid lines. You can open these up and just make them visible. Just kind of helps when you're looking at the chart. And we'll have one more setting that'll help add to this. Let me know when you got that done. And you might have to, I don't know if your colors are the same, but I've always kind of made them, it's again preference of like not having them stand out too much.
Yeah. Mine are slightly different color, but that's fine for now.
Okay, I think that's everything there. Last thing for grid lines is see this button up here? It's called Chart Trader.
Yep.
Toggle that on, do the middle option.
Does that like center it?
No,
No.
it'll pull up the side panel.
I look like I have more, let's see, vertical lines. I look like I have 2 to 1.
Well, I mean,
Or you just weren't zoomed in very much.
they just adjust. Yeah, they're like
Okay.
auto scaling.
Okay.
Once you have this up, you want to right click on it
Yeah.
and
Properties.
then properties. Yeah, and then go to, I guess we'll do this now. Some of this will be pertinent to later. Oh, I actually don't know. Yeah, I think you want this one set to here. We'll double check that probably when we get more closer to trading. But then I think this should just be, I think just this makes sense as default settings for this. Just having this on points versus like money or anything makes it so you're kind of just focusing
Yeah, you're
on.
not paying attention to the dollar amount.
Yeah, and then like having this off too, this will show how much you're up and down. Like it changes this to be, zero or up or down money. You also don't need
Yeah.
that. And then here's like later you can change a bunch of this stuff, but it's mainly personal preference. Right click the axis and properties. Oh, I see. We didn't even need to go to this. I'm just gonna turn that off. Yeah, you can turn this off. I just cut that whole section out. We don't need that right now.
Especially because we left everything as default.
I know. I was like, wait, what?
So, all right, next up, we go to this part and we leave everything default. We also won't need it until you start trading.
I thought this setting was in there that we're looking for. Okay, last thing for the grid lines, go right click on your axis, or your
Yep.
y-axis, and then go to properties, and then change this, the horizontal grid lines here. So change it to fixed, and then just leave it at points and 1 point. And so what that does is it puts a horizontal line every point, and so it allows you to really visually easily see the velocity of the market. Like if I just like scroll to the side right here and zoom in,
Yeah, it gives you a fixed point of reference rather
yeah,
than,
like
as we were
the
talking about earlier, where it was scaling all the time.
yeah, like here it's like you can see the lines are a lot closer, so you can tell
Yeah.
that the market's moving a lot faster versus, I mean, like here it's moving, there's been a ton of volatility recently, but like if I zoomed in here, you can tell, okay, that's not moving that fast.
Yeah.
And then that should be, so this will be, the idea is this is your 15-minute chart that you open up. This is kind of the first thing you're looking at every morning. And you're coming in here and saying, okay, I am gonna, look for my major support and resistance zones that we'll talk about in a second too. And like any like trend lines that I see going on, stuff like that. So this is like your 15-minute chart. And so what you can do, what I like to do is down here in the like super bottom left, the little tab right here,
Yeah.
you can right click it and just rename it. when you right click, and then where's the name? Oh, tab name. And I just like to say 15-minute chart. Actually, I usually do ES because it's we're looking at ES right now, and then just 15-minute chart. Because then then once you have all these charts up, you can easily find them when you're trying to go through your windows and tabbing through them.
Yeah.
And then once you got that, right click on it again and do duplicate a new tab. And then that'll completely keep all your settings. And then you can just go up to the top left and change it to, or you can just honestly just type in here, type in NQ, and it'll do it and it'll pull up the NASDAQ.
Should I be looking at the NASDAQ at all to start? I know you're talking about how one of them slightly follows the other, but I think it was the NASDAQ is more volatile. I think it was NASDAQ follows ES to some extent, but is more volatile or changes in some way.
Yeah, no, I think it's okay I think it's good to look at both. I think the idea is you could focus on just only, when we get down to it, only trading the ES. But I think a good confirmation that I use a lot of the time is, are the NASDAQ and the ES aligned? Because if they're kind of moving similarly, they're more likely to be easy to read, easy to predict, and easy to kind of like actually do a successful trade versus
Yeah,
sometimes you'll have the NASDAQ kind of doing some crazy move up and the ES will be just kind of chopping. And I've realized over time, like you don't want to be trading when they're kind of
they're
diverging
not
from each
aligned.
other. Yeah.
Okay, so just kind of like another indicator to be like, all right,
Yeah.
everything is moving in the same direction.
Yeah. It's a really good indicator for that. Last thing is just right clicking on this and renaming it.
Yeah, I did.
Okay. Yeah. Just to NASDAQ. You could just do NQ or you could say NASDAQ, whatever your preference is. And then we just need to, yeah, go ahead.
Really, this is a dumb question. How do I get the background lines to be more opaque?
You should be able to just go to right click and properties and then the grid line. Mine are just a dark color. That's why it's like, versus if you have like a full on
Okay,
white,
maybe
it's,
yeah, mine's a
oh
silver right
God,
now.
that's horrible. Yeah, like usually they're like default background, I think mine has background medium or something. It's pretty good. And you could also make your chart background like darker. I think a big thing is some of those colors get changed in.
Oh, I don't have all the dim gray.
Yeah, if you go, let me see. I think if you go to your, can you come to here again? Go to tools, just the
Yeah, I
normal,
can do that.
yeah, just pull up the normal NinjaTrader window. And if you go to settings,
Tools, settings, yeah.
and then on general, just right here at the bottom of this page, you don't have to scroll down. Mine's on NinjaTrader Dark.
Skin, NinjaTrader Dark. Okay.
What's yours not?
It was just on regular NinjaTrader.
Okay, so that's how you get darker colors. You will have to restart to make that change, I
Yeah,
think. But that'll probably just make your charts like much darker.
yeah. If you don't do that, dim gray also works really well.
Okay. Okay, so these are like big picture charts that were like I really just look at these like initially, and then as I'm trading, I'm really just looking at like a 5 minute and a 1 minute, which we can make in a next. So I just go right click again at these tabs down here and go duplicate a new window, not new tab.
Okay, fancy.
And then all we do is just change the 15-minute up here, this drop down, just change it to a 1 minute, and then change the name. Just take out the 5, change it to a 1 minute. And then we also want to turn on the chart trader up here.
1 second. I was busy jumping ahead and making one for ES.
Oh, I mean, I can do that too.
Okay, what do we need to do?
So change it to 1 minute,
Yeah, I did that.
and then just open the chart trader.
Chart trader. Okay.
And then you can make it full screen, whatever works. I'm just gonna keep it a little smaller because it's easier for me right now. Yeah, and then just duplicate a new tab, and we'll actually change this to a 5 minute.
Oh, okay.
Change it to a 5 minute, and then rename. Just put the 5 in there. I like to do it this way to where it depends totally on how many monitors you have and what like your setup is. But often I'll have, and then, well, just before I get to that, I'll duplicate this again and duplicate the 1 minute and the 5 minute again, and then change these to NASDAQ. So then basically you have a 1 minute of the NASDAQ, a 1 minute of the ES, and then a 5 minute of them as well. And so it's all on one window. Oh, I've messed that up. So you can easily just look through them on one kind of tab on one screen. Because
Yeah.
really it's like, okay, I'm going to be trading this one window this is like where I enter, the 1 minute is where I enter, and then I can confirm on the 5 minute of kind of like what's the more medium picture looking like, kind of help drown out the noise. And then you can also do the same thing with the NASDAQ 1 minute and the 5 minute to help
Okay.
confirm kind of what you're seeing.
Okay.
All set?
Yeah. Yeah. I have my 6 different
Okay.
tabs.
Yeah, and like your two windows. And then it's
Yep.
really easy to like on Windows at least is like to mouse over and be like, okay, I want to pull up my 1 minute or 15 minute. Like if you're on a one single monitor or if like you get lost, like usually I have a couple other ones open. Like the other one I'll have sometimes open when I'm trading is, I'll have main ES 1 minute chart on my main screen. And then I'll have, if I just duplicate a NASDAQ 1 minute, I'll have this also kind of smaller on another monitor just to like when you're really trading and like entering in, I can be
Mm.
like watching each little candlestick develop and see like, okay, is that aligning up with what I'm seeing for like, confirmation on the
That they're both
ES?
moving in the same direction.
Yeah.
Okay.
When you really get down to the nitty gritty, but again, like, we'll talk more about that later.
That sounds like next week's problem.
Yeah, or a couple weeks
Or a
problem.
couple weeks problem.
Yeah, because that's definitely like a little more advanced. So, and I mean, like, you don't need, if you don't want, you can turn off the chart traders for any of these windows.
Okay. What is the chart trader?
It's like when you're actually trading, and we'll get down to that when you're trading, it's like, it's how you
Enter. Okay, yeah, I see order
enter,
quantity.
and it
Yeah.
also brings up like these lines on the chart. Like, it brings these up. Like,
Okay.
and so it allows you to like actively manage on the chart.
Aren't those specifically are those your plugin or your indicator, or are those the base ones and then your risk reward is the
No, these are the base ones.
okay.
Yeah, like my add-ons I have, they're like the two
Yeah.
main ones that I use are like this click trader that pulls up here and then it allows me to just like I can't really do it right now and we'll get to it later, but it allows
Yeah.
to like with literally a click of a mouse like enter in an order.
Yeah.
It's kind of spazzing out because the market's just right now
And it's broken.
and it's broken.
Yeah, that sounds
Um,
like it'll be good to go through later on.
I might have to restart my platform. Oh, there we go. It kind of the market's closed right now, so it kind of spazzes out. Yeah, and then this risk reward tool. Yeah, we'll definitely go into that when we like talk more about entry.
Yeah. Yeah.
Those are super important.
Yeah, because they look very helpful and I would like to use them.
Yeah, so with I guess yeah, like so
Can you hear Tucker?
not really.
Okay.
I heard
He's going
briefly.
off.
So now we're all like set up. This is kind of personal preference too, actually, is you can right click on the chart for properties and just change the font size. Like I would say this is kind of small, but again, it's personal preference of like how big your screen is and like what your I also kind of have it big just for like recording purposes.
Where did you click?
Just right click anywhere on the chart and go to properties.
Font. Oh, I see. Okay. Oh,
Yeah.
I don't see that as something I can
Yeah,
change.
it's like this little
Oh,
drop
I
down
see. I
thing.
see. I
It's a
see.
little
Yeah.
confusing. It doesn't look like something's there, yeah.
What does
Uh,
that change? The
It
numbers
just
on the
changes,
side.
yeah, and then when you're like in a trade, it
Okay.
changes what
Yeah.
those profit numbers
Okay.
used to. No, I just lost my train of thought.
How to draw trends.
Yeah, I guess
Or is there
so.
any more setup we need to initially do?
No, I think we can get into like, yeah, your basics. Let's pull up the 15-minute chart and just try and go like kind of more methodically of like, the first thing you're gonna do is like be looking at the big picture, right? And so I guess another setup thing for that is you can pull this up by just right clicking on the chart and seeing drawing tools right here.
Yeah.
Go pull up all your drawing tools. There's also a button up here, this little pencil at the top left. And I like to just use hotkeys because it's super easy. And so if you go pull up the main control window again, you can go to tools and go to hotkeys.
Okay. Main control window. Tools, hotkeys. Yep.
And then, yeah, the first one will be chart. And then scroll all the way down, really, because that's where, at least down to where you see drawings, halfway down.
Yep.
Let's see. We want to go to, it's kind of hard to, there's only a couple I use. I think line right here, you just click on it and then click the button you want. I like F2. You can't do F1 because that's like the NinjaTrader hotkey button. If you press F1 on any window, any like thing you have selected, it'll literally automatically bring up like a NinjaTrader like help window of
Oh,
like that
okay.
section. So like that's kind of helpful for certain things. But so yeah, F2 for that. And then rectangle, I have as F3. That's how I draw my like support and resistance zones.
So this is
And
already in use by chart line. Do I care
Yeah,
about chart line?
no, just override what if it says like it's in use by something else.
Oh, yeah, I was dumb. It was also Ray. Okay.
And then vertical line all the way at the bottom, I do F6. Again, like you can change these to what makes more sense later. And then you probably won't have this, but maybe you have it as just the normal risk reward. But when we get you set up with that, you'll want to come in and change that as F4. So maybe I don't know what you have right there right now, but when you get the risk reward
I
indicator
How far down was that?
all the way at the bottom,
Yeah, I don't have that. Mine ends
yeah.
at find fixed text.
Okay. Yeah. I mean, other stuff you come in later or whatever drawing tools you think you want, but like those are like really the main ones are like, yeah, like the vertical line is how like, that F6 is how I just come in the morning and say, okay, I want a line, to mark those key times in the market.
Okay. And then I imagine I can change colors in something
Yeah,
somewhere.
we'll go through that stuff in a
Okay, cool.
second. So do your like pull up a rectangle.
Yeah, that is F. Wait.
3.
Before we do that,
Okay, yeah, yeah.
how do I properly move this chart around?
Oh, good thing you're here. Otherwise, I wouldn't
Yeah.
know to tell that. Okay, so basically you just click and move,
Yeah, which
but
also seems like it's middle scroll wheel.
yeah, that seems really inefficient for me.
Yeah,
Um,
obviously.
but it is like locked, and so if you scroll too far to the side, this arrow at the top right will pop up. You can click that, and it'll always like recenter
Mm,
your
yeah,
chart to that side. And if you hold Control and click anywhere, you can just it unlocks it. And then so if you go way off the chart, this little F pops up at the
yeah.
top right, and then you click that, and then click the arrow, and it will totally like reset it. And then the same thing with these, you can click and drag the axis, and you can click Control and drag just to like move it without like scaling it. And again, like you can reset it by clicking the F button.
Okay.
So
So is there any way, do I have to go over oh gosh.
you can
Do I
just
have
click
to go over the right hand side
to vertically move it.
to
You
like
can
zoom
just
in and out, I guess?
um there might be like no, that's pretty much to zoom in and out. I mean, I or just drag on the chart. But like generally, I would say once you like have it set up, the way I zoom in and out is literally just drag the bottom because it's like that zooms out to give you more data, and so just dragging the bottom will do that because it'll then fit to the chart, as it expands to the left.
Yeah. Okay. Mine looks ugly, but
Why does it look ugly? What's wrong?
not being able to zoom is annoying.
What do you need to zoom on? Like you can zoom in by just dragging to the right will zoom in, or drag to like pull the chart.
Yeah, I think it's really just
Getting used to it, or
getting used to it.
okay, yeah, because pretty much I think all I do to zoom is just drag the bottom
Drag
axis.
the bottom and top.
Yeah, I mean I don't think I even touch the right side really, because
Yeah.
it auto adjusts to that.
Wait, mine's not auto adjusting.
Oh, that's awkward. The F is clicked?
The F is No, the F was not clicked. I was looking at the little arrow thing and thought that's what you were talking about.
Okay,
Okay. Okay,
now it
we're
should.
good. That seems so much more natural.
Okay. Yeah, it's not you're like, well, my chart doesn't work. I can see
What are you
shit.
talking about, Riley?
This looks so ugly. That makes way more sense.
Okay, F is essentially recenter.
Yeah. F is recenter and the arrow is like get back.
Okay.
And it does the same if you drag to the left, like you go, reset to the right.
Yeah.
Okay, ready for drawings?
Yeah, ready for drawings.
Okay, so F3 to, you F3 and then you click and then you don't need to hold. It's just a toggle. So you click, drag, and then click again to like finish it.
Yeah.
And then double click on it to pull up properties. You can also right click, but I find double clicking easier. And then this is where you can change the settings. I just, whatever color you want. I like cyan for some reason. And then to make it feel like a box with strong edges is you just make the opacity 10%. And then you just have to make sure you click this outline button to match the color if you want the color to be the same. And I just keep it the same color for a support or resistance zone because really I'm just
Yeah.
the idea is like this is an area where I see it reversing and it's easy enough to be like, oh, I see it reversing, what direction. And then you can increase this width number to increase the like line around the box, the solid line, but like I find 2 is fine. 1, you can even go 1 if you want like a little more. And
Yeah, I just
then
love mine on two.
click this template button at the bottom and then click save and click save as default. So every time you click that hotkey and pull it up, it'll just be those settings.
Oh, okay.
I kind of like that. I'm gonna go with the one width for a while, see what that feels like. And then same thing with your line tool, F2. Same thing, just double click on it. I just have the line with the 2 pixels. I have it yellow. Same thing, go to template and then just do save as default.
Oh, save as default. Okay. Let me
Are you saving it as my template?
hit the first one. I definitely just hit save and then save as default. Save as default. Okay. I named it default.
There's a button.
Yeah, I didn't read.
And then I think honestly that's kind of like I guess you could do F6 and just click for your vertical line.
Yeah, and just do that while we're doing it.
And just I mean I don't know what the default is, but I just do red.
Vertical line.
I'm gonna swap mine to width of 1 and then just save as default. And then to just get rid of any of them, you just click on it, click delete button.
Yeah. Okay.
Um, right click on the chart and then go to crosshair and then do
Yeah.
local.
Oh, yeah, yeah, yeah.
It's way easier to see where your mouse is and also just like see, I don't know, match it with what the x-axis
Yeah, it lets you kind of,
are doing.
you could do a kind of a quick resistance level or something.
Yeah. Okay. Oh, last thing is go to your control window and then just go to workspace and highlight over whatever you named it, like mine is new setup, and just
Mm-hmm.
do save. I think that'll make sure you saved everything we just set up. So
Okay.
then it
Yeah.
should theoretically always, and then when you exit this, I think when you exit every time it'll say save workspace, and I always say yes because then it will save like all your drawings and
If
stuff that
you've
you
done
have
any
up.
changes or anything. Oh,
Yeah,
okay.
any changes or any drawings, it'll just keep those.
So you don't have to like restart every day.
Yeah,
Kind of like keep some of the stuff in. Okay.
yeah. Or just have whatever yeah. And then you can always right click and go to drawings and literally just remove all drawing objects if you just want to like get everything out, which just sometimes works too, because sometimes I'll have too much stuff on the screen. Oh, I guess the last thing I actually forgot about pull up your rectangles and then this attached to, I don't know if you noticed that this was different. This allows you to do it so if you click on all charts, it'll automatically, so it's up on this chart. And now if you pull up your 1 minute chart of the
Oh, it'll
ES,
also be there? Okay.
yeah, or here's the 5 minute, it'll find it easier. It's automatically on that chart. So that's how like you can easily do that. So I have that for my big rectangles, but I don't have it for like my trend lines all the time. I think I actually do by default, yeah. But sometimes like if maybe you have a big trend line on your, 15-minute chart, but then you go on a 1 minute chart and you draw like a really small trend line. Well, it's kind of annoying if that shows up on your,
Yeah, you just end up
large
with
chart,
lines
like it
everywhere.
looks like just
Yeah.
a random little tiny line. So
Yeah.
you can go in and say, okay, well, I want this personally one to just be like on a 1 minute, and then it doesn't show
Okay.
up.
And then I
And then
imagine for when you make those changes, every time you just need to go template, save as default, or just save.
if you want it to always be, yeah, if you want something to always be there, you always have to resave it as
Yeah.
default.
Okay.
I guess also because we goofed up and I didn't do this in the beginning, you're gonna have to go in and change all your crosshairs on these ones to local. You'll eventually like it'll be easy to do either like right now or just
Do I have to save in some fashion for that, or is it just good to go?
you can go to workspace again and just click save
Okay.
to make sure. But again, like when you exit out of the
It'll
platform,
prompt me to save.
it'll prompt you to save. But just to be safe, like in case like your thing crashes or something. Okay, so I guess let's start with like big picture, like support and resistance first, because those are like the most important things. Is just like, you can see that the market just zooming out, it's very like back and forth,
Yeah.
especially right now, like it's a very volatile time. Sometimes I don't know if I can scroll far enough back because we've been in a pretty volatile time recently. It's very volatile, and like because of that, for me in the mornings, I find the best thing is to be looking at like the extremes, right? Like this is the most recent like extreme high. Like if you scroll back, like the market, topped out here before it sold off kind of thing. Like in the last, I don't know how many days. This is like a month basically. And so it's like that's something I want to be aware of. And so I'll generally just draw like a box from the like I'll try and be very specific at the top of the box at the high, and then the bottom is kind of subjective. Like the idea is I'm trying to just keep track of, okay, these areas, like it bounced here. You could make a justification for pulling it all the way down to this one. But at some point, like the box gets pretty big and you want to try and like be sticking to the more extremes because those are where the market's more likely to reverse because it's kind of overextended in that unhealthy situation.
Yeah. And
Um,
for drawing these, you're always kind of starting at the absolute top that the market reached.
Yes. Yeah. Like for your biggest big picture, like, okay, what is the, like, even down here, like, this is where, like, having those crosshairs really comes into play. I would match this bottom and then pull this up here.
Yeah, and it's never like where it closed in those candlesticks. It's the
No.
farthest point it moved to.
Yeah. Because, in a 15-minute candle, it's like, that's a lot of time. Or even if you
Yeah,
did a
that's
bigger
true.
picture
Yeah, yeah,
chart, you just want to, because that's where price went. That's the extreme where
yeah,
price went. Ideally, with extremes, like I'm okay, like sometimes taking in one extreme for a zone, but ideally you have multiple touches. Like my basic rule of thumb is like it's nice to have two. Like if the market was like trading here, having these two, I mean, like I would draw the level kind of like this of like, okay, well, it's hit here before, here and here. And so the next
hmm
time it comes up here, that's like where I want to kind of hone in and be aware of that. Okay, well, it's likely to reverse in this area. You don't have to think of like, oh, it's hit the zone perfectly, like the bottom. I bet that it's going to like reverse right now, or I think that it's going to reverse right now. Or if it's broken it, that means like it's going to now, make a big move up. Like it can like break out like this and then fail back in. It's idea is it's very subjective and it's a very like loose idea of like, okay, in this area, and the area could still even be larger, it could be up here. It's
Yeah,
just
it's not hard and fast. It's like it is more likely and there's a higher chance that it's going to do something in this zone.
Yeah, the whole idea is just to help yourself like mark, okay, where are the important areas that you
Yeah,
need to pay attention to? And so like even here, like this is the last like couple days, I like to think about like the super extremes and then when I'm zooming in, because usually, like here it's like, well, I can't wait. Like it could take days for the market to get, to here this super big high or down here, right? And it's like
yeah,
there are areas in the middle, but generally I like to be, patient with those and think of like, okay, well, I need again like multiple touches for me to think about an area. So like here, it's like, okay, well, there's clearly like a spot here where it's like the market keeps failing off of.
yeah,
Um, and then same down here, it's like, okay, well, we came off this level and it's like it can find support in the middle where it's like, okay, well, there was clearly kind of a spot here where it broke this high. And then in a way, like this is like when you have trends, like it'll hit a spot, like this is clearly a resistance for some
yeah,
reason, sold off, broke through it, and then it came and like retested this area basically. And it's
yeah,
almost like saying like, okay, well, this area where it was resistance now essentially like turns into support, and then it comes and like it tests it again before it, moves up. And you can even say, so this like turns into almost like a stair step pattern where it can like, come up, come down, test, and then like move up again. And then, like it won't always follow it, right? But like it changes how it like it moves through stuff.
yeah. That was one of my questions going back that can resistance levels become supports like floors?
Yeah, and so I
Do you count that as a touch, or is it kind of just a additional thing you like to see?
as like this is a
Like
touch
if
or this is a touch.
like the left two, so where it tested it, that one and that one. Like if you
Mhm.
didn't see the third one, would you count those two?
Um, I would say no in the sense of like if you're like right here because you haven't seen this touch
Yeah,
yet. This to me feels like again the bigger thesis is sticking to the extremes of
yeah,
what the current market conditions are. And obviously like those are always changing of where the extremes are as, the market moves up and down, like and so as the market moves up here, like this was an extreme. But as
yeah,
it breaks up here and then bounces here, now it's here. Like if you kind of look at this of like, okay, this is kind of like the range it's in, this kind of feels more towards the center. Like I would start to think
yeah,
that this is more the extreme and down here is the extreme. And this is kind of, you're getting into the center where it's a lot harder to be correct about
What's going to happen?
what's going to happen. It's so easy to get in, where it just starts chopping or going back and forth. And so that's why I try and stick away from that. So I wouldn't use this as a level. I think until when I was looking at this, like this is kind of the overnight. Like let's see, right? Like this is the overnight session of that day. And so
Yeah.
but like without thinking about that, like yeah, I don't think I'd use this because at this point I'm starting to think of this as an extreme. And then as it plays out, then you get to a point where it's like, okay, now I have enough information to start to realize, okay, what is the new extremes? Like that's the hard part about trading sometimes is you'll be bouncing between like this was clearly in a range from like here to here for a couple days, and then it bounces up here and kind of goes in this range for a couple days. And so it's about like adjusting, identifying, okay, we're breaking out of this. I can't bet lower anymore, but now I have to like almost wait for more data to be able to find, okay, this is maybe the new range that we're trading in.
Yeah, that was I mean, I saw a Discord comment from the other day that was like, I'm seeing support levels everywhere.
Uh-huh.
And part of what I was thinking of when going through one of your lectures was like, where are you determining, or like what time frame are you determining the major support zones on? Because yeah, like as you were talking about, we had that first one that kind of hits those 3 points, but then it looks like it
Mm-hmm.
forms one above it. But is that still all in the middle of the two larger ones?
Are you talking about this one?
Yeah, so there's like that one, and then there's the second from the top support level that you drew. That
The
one.
the resistance level?
So the one down.
Oh, this one?
So there's that one, but is that then like is that in the middle of the one below it and the one all the
Like
way down?
right. Yeah, so it is kind of like you're looking at the extremes, and then you're kind of because that's kind of like really big picture.
Yeah.
And because, trading on a 1 minute chart, like that trade we started
Yeah.
with, was literally I bought here and sold here.
Yeah.
And so that was a plenty of move for a trade, right? And so it's
Yeah.
like because you're in such like a focus and smaller time frame, you can trade these smaller extremes and smaller brackets
Yeah.
or
And those
and
larger ones would be like, okay, we're trading overnight. Like that's a 5-day trade or something.
yeah, and I mean like I still would use these levels to take a trade off of like getting in
Yeah.
here and like, catching this up, that would be huge. And
But
so those are
you're not waiting for your 1 minute chart to go all the way back down there.
no, I'm definitely like every day is like once I'm not taking a trade here and like catching a move because I needed more time to figure out, okay, this is actually a level I like.
Yeah.
Because there's, this bounce, and then this bounce.
Yeah.
That gave me enough reason to be like, okay, there's kind of a support level
There's something
here,
there. Okay.
and like a trend line came into play as well, like off of these two right here, really. And then also
Mm.
like the ES chart kind of looked the same, and so there's other things that we'll talk about that went into that. It takes some time to learn to do that because also then you can go into your 5 minute chart, and sometimes I'll do the 5 minute chart to be looking at those levels because you can see them. Zooming that back out for those multiple days is kind of hard. But like if the market was opening here, it's pretty easy to say, okay, well, there's a nice clean double bottom here that I could say there's a potential support here.
Yeah. Tested it
And
twice.
yeah, and there's kind of a high right here. And especially, okay, well, there's another swing here. So I can definitely draw kind of a box based on those. But also, like you're saying, like you don't want to over complicate things. Sometimes it's like without trying to just say like, oh, this kind of comes with experience of like trying to figure out and reading the levels of like, okay, now it's like this level maybe isn't as good anymore, or like based on
Yeah.
what's like you can start to understand when a level is like a really solid level and when it's starting to like it's not very strong or something. And I think just going through examples and stuff will pull out why that's the case.
For this one here, that second 2 points where it's touching,
Which zone? One, two, or three?
the where it's touching the two recent ones,
Here?
would that be a good spot? Because it looks like it's doing its whole double bottom thing. But are you looking for
I think
more
you
of a
could
touch
I think
or?
you could enter in here. No, I think this is totally fine of a touch. If you're saying like, oh, it barely touched the zone or kind of didn't.
Yeah.
No, I think it's totally fine. Like again, it's super subjective. Like you could have drawn the level like right up here.
Yeah.
Sometimes I'll think, oh, like sometimes I'll take in like, oh, this is like a little chop range that it had. And
Yeah.
so almost like think of this as like a little box where the market came down and bottomed.
Kind of consolidated.
Yeah. And so take that into account and draw my box, including that.
Okay.
Um, but again, you don't want to get too crazy. Like this one up here, I don't want to take in this whole box because then you pull the box like,
All the way down, and it's
yeah,
almost.
it's almost in the middle of the flipping range here. If you stick to the extremes, like your box
Yeah.
is all the way down here. So you want to be aware of that when you're drawing that kind of stuff too.
Okay.
And then trend lines, I would say, are pretty similar. You can have, like I think they're pretty subjective as well, and I try and do them pretty loosely of like, hey, you have a swing here and it touched here, and so I'm gonna draw a line off of that and just pull it out. And I like to try and do the extreme of the initial one,
Mhm.
like the extreme price, and then just touch somewhere on here. Usually try and stick to the extreme if that makes sense. And then, this, it's like, hey, it's close to the trend line. There's not an easy way to like make a rectangle like we have for the
Yeah.
zones that trends like that. So I just try and use it like, hey, it's close. That's another indicator that I can say, especially with confirming that with like, oh, well, I kind of have like a low here and a support zone that I think might bounce to. After this bounce is made, you can then say, okay, well, it bounced here. I'm gonna adjust this to take that into account. And it's like it's fine if it cuts through like these
Yeah.
candlesticks up.
You're a little bit kind of using like the mean
Yeah.
or like the average.
Yeah, because the market doesn't. That's why it's like I draw the zones. You don't want to draw like a specific price and be like, okay, well, the market has to come up and touch this exactly to reverse for me to take a
Yeah.
trade. That's not really how it works.
Yeah.
Um,
I think something that has kind of been helpful for me when thinking about this is just being like, this is all behavior based. Like this is people reacting and doing
Yeah,
things.
I mean that's a huge thing why like I don't know, for an example here, like the market bounces here at this specific price and then it comes up again and people are like, "Oh, I really like this spot to bet that it's going to go lower, but I'm going to get
Yeah.
in early because I think it'll reverse before that or I want to get in before it starts reversing." And
Yeah.
so it pushes it lower earlier.
Yeah.
And so that's why it's like stuff can, reverse in the same area, but not the exact
It's not
price.
exact same point or price.
Yeah. And so, yeah, trend lines, I use like kind of the same thing of like you have like there was kind of a big picture trend line here of like taking this extreme high and then touching these two. And then, this was kind of like with a little bit, you could see it like right here. Like it was like,
Yeah.
oh, we did a big punch up. Like this is pretty like kind of through those areas. And it's like, okay, might sell off here. And then it broke it a little bit, but it still kind of sold off.
Yeah.
And then eventually, it kind of went sideways and eventually broke it. Like that's a lot of times how things happen is they'll start to go sideways and then break or something. It won't always, if it breaks, it doesn't necessarily mean it's just gonna like start skyrocketing.
Yeah. It seems like the market likes to try and think about it for a second,
Yeah, sometimes for
unless it
sure.
has a shitload of momentum.
Yeah. And then same thing on just like, using that on like a smaller time frame chart. Using it as a guide to say like, okay, there's this like really tight downtrend and now it's broken. And so because of that, it's like the trend is probably going to change. But it doesn't mean that it's not going to continue lower. It could just continue
Yeah.
lower and like sometimes you'll have like a super tight trend like this. You'll have like a trend line and then it will break, but then it will just be like, oh, it's actually starting like this bigger downtrend, this more healthier downtrend that has like this kind of trend line that matches what it's doing.
Or essentially it's kind of like consolidating and thinking about it and then going lower again and then thinking about it again.
Yeah, like having a pullback is a healthy part of the market.
Yeah.
And that's like what kind of I think the next thing is so like, in your first week is like looking at those big picture levels, but then between them, like what'll really help is like, oh, if the market's gonna like break a level or not, is having stuff like, you have, I think, try and go down a list of like, I think you have something like you have a healthy trend, you can have, and a healthy trend I would say is like something like this that's just like methodical and
Yeah.
almost like having that, like that stair step pattern essentially. Now, it doesn't
Yeah.
necessarily mean like,
Or the like flag shape.
yeah, yeah, I mean, a pullback can be like this one, like it's kind of just like consolidating and pulling back a little bit before it continues. Yeah, like here, it's like great example, like move up consolidation. And the strength in that is like it slows down, but it doesn't go down.
Yeah.
And so that shows you a lot of strength of like, oh, it's likely if it's not gonna like fail and give this move back up, it's likely to keep going because that means there's a lot of momentum and the buyers aren't drying up. They're actually continuing. Um, and so that's like a really strong trend, I would say. And how like an easy way to see when it's going to end is when you start to see like it change of like, okay, there's
A big kind of
yeah,
candlestick
like this
change.
is yeah, like this is a big change. Like there was any time in this trend, there was no like pullback that was like huge like that. Like this was the biggest pullback and it was a lot more stable and then eventually like it rocketed up. And here it's like okay, it pulls back. And just because you see that, it's like you're not going to short, but like it's an indication that it's something's changing.
Yeah. Like it spent,
Um,
because what, each one of those blocks is 5 minutes, so it spent
this is 1
15
minute
minutes
chart.
slowly ticking up and then
Yeah, I mean like
dropped in 5 minutes.
yeah, I mean, this is a 1 minute chart, but like, yeah, it doesn't matter. Like, it could
Oh
be
yeah, no,
anything.
sorry. Sorry, I was talking about the larger grid
Yeah.
squares.
Um, and so that's like the biggest thing I think is like just when you're watching the charts in the morning is like looking at like, okay, what type of move is happening? Like this was Friday, and so it's like market opens up here at 9:30, and then like this is another thing you're gonna have to easily identify is like, okay, it's just going in a chop. Like it's getting used to like seeing that
Hmm.
print. And after the fact, it's easy to tell, okay, it was choppy here. But like when the market opens, it's like starting to recognize that of like, okay, we're like just having these swings back and forth. And a lot of time it's like the candlesticks are kind of really close to each other and like not really moving. And like the wicks are very large. I mean, the general, like, it doesn't have to be like super technical. It's just like realize that, hey, in reality, like the market's really not going anywhere. It's not really trending. It's just a lot of all over the place, right?
Yeah.
And then it like clearly starts to move. And this I would almost say is more likely a strong trend because even though you don't have any pullbacks in it,
They're big wicks.
so yeah, you can say like here it's like in these two candlesticks, the market did move up and make actually a massive pullback.
Yeah.
Like here that was a big pullback. And I would say a lot of the time when the market opens and chops for like 30 minutes, you could even say like, okay, it was chopping like for 20 minutes, 25 minutes. Like it's gaining its momentum, it's kind of like sitting there getting ready.
Yeah.
And so it does make the potential for a move like this to be stronger. And so then, it like when it comes up to, I think I got to redraw this. I think it was this, essentially like, here's our resistance zone, right?
Yeah.
And so when it comes up here of being like, okay, we're close to it, this is where you might think of it could reverse because it's at these highs where it's reversed multiple times before. You think, well, it's consolidated here, it's moved up. In reality, like big picture, like you'll get more used to this. This isn't that large of a move.
Is not.
No, it's not that big of a
Okay.
move.
Yeah, because
Like,
that was gonna be my question of like it almost looks like it's done a little double bottom-ish almost in that like first 30 minutes. Yeah. And
yeah,
like then is that 950 or
yeah,
955 when you start seeing it
955.
ticking up? Is that ever a spot where you're like, okay, I'm gonna hop in, or is it just it's not at the bottom?
That's not how I trade. Like, I want to see
Okay.
a move like this that I think is unhealthy, that I think is going to fail.
Okay.
To me, this is just like, I'm staying out.
That's the that's just the starting what it's
Yeah.
doing.
And it's like the market, there will be plenty of days where the market opens up choppy and it just doesn't do anything. And I just get off for the day. And
Yeah.
here you can also see it's making this like consolidating wedge.
Yeah. Yeah.
And so that's just kind of like at that point, it's like, oh, okay, if you were like taking a big picture bias of like, well, it's at the support zone, so I think it's more likely to go up. You totally, there are definitely people that would take that. That's just not something I like to do.
You're looking for higher level of probability.
Yeah, and I just think that I like to see the move happen in the day versus it because you don't know, it could just kind of continue to chop.
Yeah.
Um,
Yeah.
And so, yeah, I mean, I think like, but there can be trades like this, trends where it's like, okay, if we go to I think the day before here, this is actually the trade that I took is like where the market, let's see, opened up right here at 9:30 and it just kind of sold off. And part of it's like, okay, this isn't like a super unhealthy trend. Like it does have pullbacks in it. but then it just starts to go super choppy here.
Yeah.
And then eventually, like, I guess there was indicators of, I thought like, okay, well, I think it's slowing down and it's gonna like reverse higher. But every time with these is like you don't want to be thinking that it's gonna reverse until like this trend is broken.
Yeah. Until you see something actually happen.
Because just because it's like at a level doesn't mean it could just keep kind of trending down, like bouncing off of this trend line. And so that's kind of like a big indication of like you're using these bigger picture levels that you draw earlier to then go into a 1 minute chart and watch like, okay, how is the market moving today and how is it reacting when it hits this level and like what does the trend look like? And you don't have to always know. Like there's plenty of times where I'm like, I don't have a good read on what's going on. I can't tell if the trend is healthy or it's not, or just for some reason it's just being really jittery. And I don't feel like I have a good read, and that's okay. Like the idea is to be only trading or making trades when you're like, okay, I have a really clear understanding of what's going on. I'm super confident in this like zone being a good zone, and then also my read of the market, what's it doing today.
Yeah.
That's why I like to wait for like I don't take a trade at the market open. Like the first time I'll take a trade is like that 9:45, that 15 minutes after the market open time, because it gives you time to see, okay, what is the market doing this morning? What's it done so far? It opened at this high. I don't think this was a zone yet. Yeah, it was like the market moved up here, kind of chopped, attempted to go higher, and then it essentially just opened up and started selling off. But like this isn't like a super unhealthy. It's like kind of down a little bit and it's chopping a little bit. And so
Hmm.
it's like, okay, I don't have a good read. Like I don't have a good read. I'm just gonna let it keep printing until either I do have a good read and it's fitting in an area that I want to trade. Like right here, it's like, okay, I have this zone down here. If it sells off in a good way and sets up, a head and shoulders pattern or a pattern I
For
like.
for that zone, is that a future zone though?
Yeah, I mean, like we
Okay.
don't have to get into like,
Yeah, yeah, yeah. Yeah, yeah.
like I think this is just more of like theoretical,
Yeah.
of like it coming down to this zone and you essentially trying to have a plan of what I want to see to take a trade when it gets there versus just kind of waiting for it to happen. And you'll get better at that as you get better at like seeing what these trends look like. But here being like, okay, it's not I don't have enough information or I don't have enough good enough read and it's not acting how I want. Like there's not enough movement
Yeah.
here to make a reversal. And obviously it's not at a zone that I like. And
Yeah.
then when it gets down to there, then you can start to say, okay, now I do, and here's like more that 10 o'clock timing of, okay, now I do have more information. But then also you're like, okay, well, now there's this,
Now
at
there's a
this
trend.
point, I
Yeah.
can really make this trend line, and I need to see that broken.
Yeah.
Um, and so here, it just starts to go into a chop fest of just candle after candle, just not doing anything. And you're like, okay, well, it's gonna break this trend, but I got to be aware of that. I need a little bit more movement to happen, kind of thing. Um, and so like I don't like to enter in on stuff like this. I need to see it start to break. You can start to like with these little chop zones, you can almost make sometimes I'll just make like I'll just do this in my head a lot of time, but you can make like a little box,
Yeah.
of like something that just like makes it so it's like, okay, there's just like this little box here, and I need to wait for it to break out of this because then it's broken out of this like area that it's clearly not doing anything. Because otherwise, you'll in these chop ranges, you'll get these like big candlesticks
It
that'll,
looks like something's happening, but
yeah, and in reality, it's like it's still staying in this range.
yeah.
Um, and then it kind of breaks out and does like I don't want to get into this too much, but like a fake lower, and then that fake lower gets reversed, and then that was like kind of the signal that I was like, okay, now I think it has a potential to reverse.
It's
But again,
tested
like
again.
yeah, again, that's more like entry stuff. The
Yeah.
idea is like, okay, the big picture. And that's like the idea is like you're slowly going more narrow and narrower focused as you kind of get into these areas of like, okay, what is, the big picture like zone that I'm getting from a 15-minute chart or a 5 minute. And then either on a, you could also go to a 5 minute and look at this of like, okay, what is like, what have we done? We've done a big move this morning into basically like here is like kind of more of that zone I was looking at that day of like,
Hmm.
okay, it's kind of bottomed here. And then
Hmm.
there was also this upward trend
Or
line that was
farther
coming
back,
into
yeah.
play. And so it's like, okay, those are like two kind of, it's kind of theoretically bouncing off of this little swing here. And then it's also like hitting this trend line. And then, going into kind of the 1 minute chart of seeing like, okay, what's the trend? And seeing that it's kind of bottoming at that 10 o'clock time,
Mm.
which is that timing that I really like of when step reverses. And then seeing like even just the big picture of like, okay, there was a downtrend. It's clearly lost its steam. What's likely to happen at this area? You don't have
Yeah.
to be thinking about this, like what the candlesticks are doing specifically. Just like you could almost even like blur your eyes of like, okay, we're down, we're kind of sideways, and we're at an area where I think there's going to be upwards pressure. Well, then it's likely that we go up, whatever that looks like.
And then what am I looking for
Yeah, and then
to confirm?
when we get into like the
Yeah, yeah.
entry, it's like, okay, what am I looking for to actually enter in a trade of like where I enter and like where I put my stop loss kind of thing and write it up.
Okay. Well, I know you don't have a lot more time, right?
Yeah.
So for this week,
Well, I
I
guess
should,
yeah, it's like because I was trying to I guess does that make sense with like trends? I mean, it's like I think just
yeah,
this
I
week,
think so.
like there's there's gonna be like this is like a super strong trend, like we kind of had originally of like it's not really having pullbacks, and then you can have trends where it's like
Is-
like this one, it's like it's super strong, but it's kind of unhealthy of like it's a huge move, and so it's like it has a more likelihood to fail, but you just have
Yeah,
to you don't know sometimes where that is. And so I think in the morning trying to just get good at identifying what kind of trends are
healthy, unhealthy.
happening. Yeah.
Is there a way to put in text boxes
You
onto this
can
of just like right
yeah,
click text box?
right click, drawing tools, text, and then
Okay,
click and then
cool.
type.
Okay. So
Um
maybe I'll try and go through and just like put in resistance zones or put in floors and ceilings or resistance and whatever the other word that I can't think of right now.
trend
And then
lines.
trend lines and then put some trend lines in and then try and label them healthy, unhealthy.
Yeah. Yeah, and you could like try and take pictures and put them in like a folder or something. Another thing I like to do, like a super easy way of doing this is just with like an indicator. If you go, I don't put this on my 1 minute charts. I like to do it on a 5 minute. Is if you just go to your 5 minute chart and go up here to indicators. I don't know why this little square circle keeps turning off. And then in the box, just type in, don't know how to spell, like fair to bring up fair value gap, or you could just type in gap or something.
Oh yeah.
And that'll bring up this indicator called the fair value gap indicator, and you just click apply without changing any settings, and it will help essentially identify like unhealthy moves in the market.
Yeah. Should I start with that on or leave it off so that I'm not relying on it as much?
That's a good question.
I think I'm going to start with it off so that I can try and do my best and gain some intuition.
Yeah. Yeah,
And
because
then,
it's not gonna be right every time. Like this was, this it's saying there's an unhealthy move here, and this was that move here we were looking at earlier, where it's like there was definitely reasons to say it could have been an unhealthy move, but I think there was other reasons to think it wasn't. And
yeah,
so
and then it kind of did that little consolidation thing there.
yeah, I did this little pullback and then kept going higher. And yeah, so yeah, I think that's totally a reasonable thing to do is like leave it off. Because I mean, at the end of the day, like, yeah, you can see it's pretty easy to see, like, okay, this is a big move down. We need to give that back up. Or like, this is a
Yeah,
big move down. It's like the basics is like, okay, are there a bunch of candlesticks in one direction without like much pullbacks? Essentially, like, like the bodies are just all stacked up on each other, just moving up,
yeah,
and it's just one directional, like
yeah,
that's like the easy way to say. And like the whole idea behind these unhealthy moves is like, okay, it moves up crazy, well, it has to kind of pull back. Moves
yeah.
up crazy and it kind of has to pull back, or the flip side of it, like a crazy sell off, it has to kind of give that back up to some extent. Yeah, this week is like just trying to get in that routine of like pulling up your like 15-minute chart, looking at, kind of what's going on, trying to think about the trends and stuff of like what you're seeing, and then just seeing what that's like, and then also, doing that on a 5 minute, trying to think of your support and resistance levels and looking at
For
movement.
for drawing support and resistance and trends, you're generally doing support levels on a 15-minute chart, right?
Yeah, like sometimes I'll look at a 5, but like quite often, even the 5-minute ones, like even these swings, like you can tell it's on a 15-minute chart that there's, like this support level
Something
here.
there, yeah.
Yeah, like you can still
Okay.
tell.
Yeah, and then I imagine you're never really drawing them on a 1 minute because it's just
No, I think yeah,
you'd be
definitely.
too far in.
Yeah, you're too zoomed in, and that at that point you're not looking. You're not using the like big thesis of like, oh, I'm sticking to the extremes.
Yeah. What levels are you drawing trends at? All levels?
Trend lines.
Trend lines, yeah.
Um, yeah, I would say so. Because I like to think though, like trend lines are a lot of like helping you identify like the big picture that's going on.
Yeah. Yeah.
Of like, okay, here there was this like trend line up that was going on.
Yeah.
But
Okay.
also like try to not just say, okay, we're in an uptrend. Just think about it like here, it's like, okay, it's trending up, but it's starting to make
Yeah. Tops.
tops and like it's starting to reverse in the same area. And so
Yeah.
when that happens, well, it's probably going to break this at some point. And so trying to think about stuff like that too, of like, don't get married to a drawing tool. It's all
Hmm.
subjective at the end of the day and, stuff like that. Next week, well, we can get into, I think, more the nitty gritty of like trying to enter in and stuff like that. Cause I think, I don't think you need to start doing it this week, but at that point, it's helpful to just even start learning like what it feels like to just the controls of all that stuff.
So I have watched I don't know, what is it? The course overview. I guess the section 1 and 2 in your course. Should I watch section 3 this week in preparation for the following week, or just hold off? Most of it, that's like how to enter into trades properly, my phase 3 management, blah blah blah, and then a bunch of like trade walkthroughs.
Um, I don't know. I think we can just hold off on that. Yeah.
Okay, stick to the basics.
Yeah.
Don't
Yeah, because
overload
that's
my.
like you're getting ahead of the game of like, yeah, you're not even thinking about it. You're not even starting to enter in yet. Like I think
Yeah, yeah,
because it's like
yeah,
the big picture and just learning to read the big picture is literally going to be like 90% of your success.
yeah,
Just being able to pick the right zones to reverse at and being able to pick and understand like, okay, what is the trend? Like why that, it's reversed here multiple times. Why this time is it gonna push higher?
yeah, yeah. Managing trades doesn't really matter if you're not trading in the right spot.
Yeah, like and 90% of your trading is your entries. And so and your entries are based on your thesis of what the market's gonna do from that area. And so getting that down is like the most important thing about trading. Like it's so many people get distracted by all the other stuff.
Yeah.
That's why I think like
Are
so many people overload and then they realize, oh, I need to go the simple route and just like
yeah,
go back to the basics almost.
yeah, yeah. Keep it simple, stupid. But should I be trying to do, or maybe I just try, like little market theses of like, I think it's gonna do this here at all, of like, oh, it's approaching a resistance level. I
Oh,
think it
like
might do
kind
this, or
of
I think it might do that.
almost like you're not entering in a trade, but you're saying, oh, I think it's gonna bounce here.
Yeah, or I think it's
And
gonna do
like
this.
so you
And
write down. I think
maybe it's
that's
something
a
I
good
try and
idea.
think about, but like,
Yeah, like you could even like something like this. You could type like, okay, I think we're at here, I think we're because of these reasons, I think we're gonna go up.
yeah,
Or like this trade like you came down here and you had that like support zone and that resistance zone and you could say like type in like reverse up something
yeah.
like that
Put in some thoughts.
yeah like reverse
Okay.
up because of I think probably saying like because of blank will help
Yeah,
you get in the mode of like why do you think that versus
yeah,
like just because you don't want to just start randomly thinking that and then because even if you're not in a trade you're still going to get like kind of some confirmation bias if you're right or wrong
yeah,
and
yeah.
so
I'll be like,
trying
oh yeah, I
to,
was right. Yeah,
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 it'll just be random thoughts that pop in your head, and so like
yeah,
trying to just think of like, okay, well, I think it's gonna, even if it's like, oh, I think the trend's gonna just start chopping here, and you could always change it as like more candlesticks come out of
yeah.
like, oh, it's like moving, I think it's gonna reverse that now, or I think it's gonna like fake higher and then go lower, stuff like that. Okay, so week 2, we are trying to start focusing on trade entries. So I'm just going to quickly show you a trade I took a while ago where, you know, it's basically the same, just to kind of give a quick overview of what we're trying to accomplish again. The first week we were really starting on identifying just these trends. And then I think this week we can start to really focus on how do we tell like when something is going to actually bottom and that we can look for an actual trade and reverse to the upside. Especially this last week, and we'll get to it, there was a lot of times where we got to, let's say, like a support level here or a resistance level up here, and the market just broke those levels. And so how do you tell the difference between that and the market showing signals where it's going to start to reverse and we can enter a trade and, you know, take advantage of that and bet on the reversal. And so the big part about the strategy is finding those reversal spots here using, you know, the idea of identifying the major trend of the unhealthy trend into this support zone. And then like in this trade, identifying there's a head and shoulders pattern and then a potential for the market to give back this kind of unhealthy move. This is a very common like target to go back to this high right here. And so this week, I think it makes sense to try and get you ready to trade and not necessarily be entering in, but focusing on starting to identify them and have the tools in place to figure out, okay, how you can pull the trigger on these trades and starting to paint the full picture of, okay, the 5-step process to, you know, enter in on this trade and then, you know, what it looks like so we can start to kind of visualize that more.
Perfect.
What else? Yeah, and I think last week we did a good big picture of talking about identifying trends and the big picture. I think it makes more sense to, well, now we can start to look at, I mean, head and shoulders patterns and other patterns that are used to enter in on.
Yeah, I had a couple of spots where it's like, seems like there could be something here, but I don't really know what I'm actually looking for in terms of an entry
Yeah, and like when it
pattern or signal.
how do you know when it's going to continue going in one direction versus
Yeah.
actually setting up a trade to reverse?
Yeah, one of the questions I had somewhere was like, how much like how credible are those zones from way back?
I mean, it makes sense to like just go through a bunch of those questions.
Okay, and because that might maybe we start with that, and then that'll jumpstart thoughts or ideas,
Yeah.
and then we can go from there. Yeah, I think maybe we start with market and structure. So like section one was at Q4, the like how normal was last week, mainly thinking about the like having the major drawdown on
Yeah.
was that Tuesday? Or I'm sorry, the major drawdown on Thursday, and then also having the spot where like the NQ and ES were not lining up in like the moves they were making, or at least I think NQ was leading ES in the trend for a while.
Okay, I don't remember which day that was, but yeah, like, so how normal the week was last week, it definitely was not super normal. Like, I mean, even if you just look at like a daily chart, we zoom all the way in, let's see, we're technically on Monday. So if we discount this candlestick, I mean, like the wicks were pretty big. I guess these are the 5 candles the last week. And it was
Yeah.
definitely like pretty all over the place. But you can also say like right now, that is kind of almost the norm. Like in the last few months, there's been times where it's like, okay, a week you barely move anything.
Yeah.
If these are, you know, each of these are a daily chart. And then like you have like here's a week where it's like, okay, the market kind of went crazy. So it's definitely been like very volatile. And that's where like, I don't know, market type comes into, or like just what the mode the market is. Because if you know, look at these last 4 months, but then you go and look at, you know, the 4 months before them, like the amount of movement that was happening was very small.
Just much smaller candlesticks.
And then there's some moves and then some downs. So like we're definitely in a like much more volatile time.
Okay. Yeah, one of my questions farther down was like, how do you determine if a candlestick is like big or significant in terms of sizing? And like, is there like a number of little, what are they called on the side, points?
Ticks or points?
Ticks. Yeah, ticks or points that like it needs to hit for it to be like, oh, that's a significant move. Like that's, I don't know, indicating that the market's moving heavily in one direction. I should enter in a trade. Or is that kind of all just relative to what the market's been doing? And so, for instance, like just like you were saying here, everything's been going up and down like crazy.
Yeah.
So that's kind of just normal day or normal week.
I mean, I think it's like even day to day it can change. You know, you judge of
Yeah.
like
This is all kind of relative.
Yeah, I mean, like, you have candles like this where it's like they're kind of this size, and then all of a sudden, like, they're this size, and then all of a sudden, they're this size. And so I think it's like just kind of using, okay, what has the market done in the past recently, and where are you, like, what are the current candles being printed in relation to that? So, like, this candlestick is huge
Yeah,
compared to these ones.
those ones,
So
yeah.
that, just knowing that, okay, something has changed, and this is like something that you should pay attention to, and know that, like, a lot of time that can change what's going on in the market. And then also, even like a big candlestick like this in a choppy situation like this, it can be a lot more likely that it just reverses like it did right here.
I think we briefly touched about it, but like even something like that, even though it seems like, oh, it's so unhealthy, it has to snap back. Like if there's not really an entry spot or something obvious, it's just not worth trying to take it because you're just essentially FOMOing in.
Yeah, I mean, those like V bottoms like that are just really hard they're just not tradable.
Yeah, it's more like gambling than.
Yeah, I mean, sometimes like I mean, even like on this day last week, I think this was Wednesday or something, but where the market just like opened up here and just sold off for hours,
Yeah,
trying to like catch a bottom when the market's so strong in one direction just doesn't really work, because it's just so unlikely to reverse after it starts to really move in one direction with that like momentum.
yeah, yeah. There's just so much pressure. Okay. Yeah, I think it was on the day before this, on the 27th, there was a lot of upward pressure. And one of the things like you traded for a bit and then in Discord we're just like, gonna be really hard to take a trade today. It's just yeah, just really hard, gonna be really hard to take a trade today. And it seemed like it was hitting some, I guess, resistance levels throughout the day. But maybe it's just like was there just kind of like too much upward pressure that even if it hits resistance levels, it's just so likely to continue going up.
Was this is the 27th? Okay, yeah.
Yes, yeah,
Uh,
127.
I'm just trying to situate myself on the chart. Yeah, I think looking at it, trying to just find the price of what it looked like before the market opened. I think the idea was that with this was that we just taking into account like the super big picture of having this big sell off and bottom the week before, and then it kind of did this consolidation pattern like bull flag, or pull back, where the market just kind of chopped for a few days, and then it breaking out of that
Yeah, it
and
was
then
just
pulling
heading
back and
up.
continuing higher. It just seemed like there was a really strong trend in place, so it was more likely to just continue higher.
Okay.
And even though like there's these highs back here, you can definitely make a good resistance zone off of this.
Yeah, that's one of the ones I drew.
Even if you pull it down to like where these two highs touch too, like
Yeah.
it's very far away from the open price. And so it just seemed like it would be more likely that the market would just, trend higher over the day. And so like going on to a 1 minute chart, I think this is that level. Like when it broke that.
Yeah. And that's kind of where I was looking. I was like, oh, is this a spot where it could reverse now? Because you've hit your resistance level and it looks like it's doing almost like a little double bounce or testing if it's wants to fail. But also it has, maybe it's just like a question of like, it has so much momentum behind it heading upwards that it's probably just going to continue upwards through an old resistance level.
I mean, same thing though, like both of them on this day, the NASDAQ pretty much opened at the resistance level and then sold off and came up. And so, I mean, both of them kind of hitting that move up in the morning. Like this was a nice move into that level, like to where it could reverse.
Yeah.
But one thing was when the market it opened here, and when it kind of does that spike lower first, and then it's almost like, think about it like the market's already faked in one direction this morning. And so
It's probably not going to do it again.
yeah, I mean, a lot of like you have multiple ways the market can play out in the day, and I feel like a lot of the times one option is it fakes in one direction and then trends in the opposite way it faked, or it could just start faking in every direction and you have more of a range bound day and choppy day. But a lot of the times, especially if you take into account the big picture of thinking that overall there's going to be upwards pressure, it's more likely that this fake lower is going to turn into just trading higher. So even though it comes up to here and had this like big bearish bar, you can start to think, okay, well, that could turn into a spot where I could look for a reversal, because this could be considered a pretty rapid, unhealthy trend move, because there's just bullish candlesticks here.
Yeah.
But I think the big thing is, okay, well, trying to think of like where the market's going to move is where like the gaps between like support and resistance and so like where is this going to pull back to? And you can't just think about the low here. You have to think about, okay, well, there's kind of this here too.
Yeah.
And so it could come back to here. It could be breaking out and pulling back to these previous highs from like
Yeah.
the overnight high. So there's all this price movement in here, which makes it so there's not as much of, when you think about like the fair value gap idea of like if there's just nothing to hold the market, it'll just fill that quickly. Like I'm trying to find a good example here. Even like this is a good example of like, okay, the market shoots up here and there's so much room between here and, this previous swing here for it to like move down. And so the potential for a swing to go a long ways is higher because there's not as much support or in the way. And like you could draw this here, but really it's like so close that it's probably just a
it's
failed
almost the
break out of
same
that.
level. Yeah.
Yeah, so it's like the next level down. That's why I won't take, even though this looks good, sometimes I'll think, okay, well, if I enter in here, how much space do I have before it runs into some resistance? And in the
Okay.
sense of like, if you're getting in a trade and your risk reward is like this, it's like, okay, well, it doesn't go very far in my favor before it, has a chance to reverse. And so that's a big thing to think about. I think when understanding like a almost like a little bit advanced of like understanding when it's worth risking taking a trade is those gaps. But I also think that just comes with reading the trends as well of like, and in a way like a healthy or unhealthy move potential.
Yeah.
And I think like here, like the patterns I would be looking too short here, because just because this is here doesn't mean it's like not a good spot to bet a trade. I think here, like this can actually be a good signal too of like, oh, this thing moved up. Clearly it was losing steam right here because it got super choppy.
Yeah.
And then all of a sudden it just, broke lower in a big way. And so so with that, my first thought is like, okay, well, is this just a pullback to continue higher, because it's the pullback like that is healthy in the sense of for the uptrend. And so I would want to see, okay, what is this? What is like these next 3 candlesticks look like? Does it, start to come up and like retest this area where it failed and then start to turn down? That's where you would start to want to think about, okay, well then maybe I'll get in short once it like breaks this low again.
It goes through that. Yeah.
Because the way I see that is like, it's really it's showing you that this is like I don't like to read into every individual candlestick, but I think in these key areas it really helps to.
Yeah.
And so that's where like I would be reading into candlesticks and looking at like, okay, how is the price reacting to, and is it going to make a new high? And if it breaks and makes a new high, I think it's probably just going to keep continuing higher because that's a really strong signal.
Yeah. Strong rejection of that.
Yeah, of this like failure to or trap to go lower or attempt to go lower. And then this becomes an attempt to go higher and it succeeds by making a new high versus attempting to go higher and then failing. And so, even for like almost like for this big candlestick, it's almost like whichever way it breaks out is a big signal.
Okay.
If it broke that way or broke out this way. But like this isn't, I don't consider this candlestick, breaking out of this. Like I think that's almost just like, okay, it's moving down really fast. The candlestick closes and a couple seconds continue and then it reverses. You just see it as one move.
Yeah. Yeah. That was something I was thinking about for either like 5 or 15-minute candlesticks is that some extent how they're drawn very much depends on which minutes of market activity they encompass. And if you move them 30 seconds or 1 minute, either direction, it can change the shape dramatically.
Yeah, that's why I think, yes, I mean, that's a really good observation is, like the candlestick forms very differently if you just change the time by a couple of seconds. And so some people will do this and I don't think this is good. Some people will just go to like, oh, if they don't like how the 1 minute chart looks or confirms, they'll go to, a 2-minute chart or like, they'll go to like a 30-second chart. And it's like, it changes how the candlesticks look. But again, like in a lot of ways, you're just almost like trying to find something that looks good to you.
You're trying to find something that says yes.
Yeah, you're like basically looking for a confirmation. And with how the market is, You can always find that if you set the right indicator or thing on your screen. You could just draw something that tells you, to go short. You could just make some random pattern up.
Riley, I've got a new indicator for you. Whenever there's a white candlestick, you enter. How do you look at it when you scroll a little bit to the right, when it's comes back and retouches, so at the, I don't know, what is it, 10:30-ish time frame? Right in
Like
there.
this
Like
area?
it, yeah, when it retouches that, are you thinking about like, oh, is this a, I don't know, that's not really Head and Shoulders forming, but like, is that another spot where it's testing downward pressure to see if this whole thing is a failed breakout? Or like, I guess the question is like, what constitutes a failed breakout, and what does its like time frame look like of like,
Yeah. I generally think they have to happen pretty quickly.
okay,
Just because I think the idea with them is, the movement's happening quickly, and then, some like double top like this happens, and then it fails like that. Because the idea is it's a lot of people getting in rapidly, getting super excited, and then there's no actual strength behind the market to hold this price up. And so the longer the market sits up here, the more strength there is in confirmation that there's people that are
people are good
willing
with it.
to, yeah, they're accepting the price. Either they're holding in, they bought down here and they think it's going to continue higher, so they're holding, or there's people jumping in here thinking it's still good. Either way, like it's not, it should happen pretty quickly. And again, that's not super, super clear on like, oh, wait this many candlesticks or wait this many candlesticks and
Yeah,
after this many
definitive, yeah.
candlesticks. Because like here, it's like, this is still like, I don't know, what, 5, 10 candlesticks. And I would still say, yeah, this could totally happen. I've come up here and fail. But I think it
Yeah.
should be, okay, if, this was a strong, for this, particular spot, like this is a big candlestick. And in my eyes, if this candlestick, if it doesn't come up here and fail and that's what happens, that's where it should have, in my eyes, that's where it should have happened. And so if it makes a new high and then starts to chop and even starts to pull back, I think at that point,
Okay.
the failure potential has gone, and instead it's transforming into it would be a different kind of trade. Like even if it came up here and eventually slowly reverse and trend down, it would be more likely that it's a slow sell off, and those aren't really like something I want to play with.
Yeah, they're not
Just
what you're
because
doing.
they're
Yeah.
a lot harder to actually trade and manage. And in that sense of like, you could also paint the picture of, well, this is just like a bullish consolidation after that move, so it's harder
Yeah.
to predict that,
Like
I
if you look at
think.
that on a 5 minute, it probably just looks exactly like that.
Yeah, and I think that you're at this point, usually these play out with the major trend, and I would say the major trend is to the upside. And so you're betting on, I think at that point you're betting against the major trend, which isn't a good idea.
Yeah. I think the major thing for me to try and focus on next week is thinking about time frame of everything and like making sure I'm zooming out or using a good frame of reference. Because like as you say here, like if you paint the giant flag there, yeah, it's just like, oh, this is just a consolidation. But remembering to do that rather than getting focused on, oh, in this tiny window of time, in this what hour and a half that we have here on screen,
Yeah,
things can look one way, but as soon as you zoom out a little bit, you're like, oh, actually,
yeah, it's more
that's
likely
just
that
a
it's
consolidation. Yeah.
in a huge uptrend.
Yeah. Yeah. Keeping the bigger picture in mind is something for me to work on or focus on.
Yeah, and like we talked about this last week of, I think that's the biggest thing that'll be the key to your success, because you can have all these little, like a great move up, these little micro patterns that look good, but the micro patterns I think are so inaccurate by themselves that they're never were, they have to be like the last thing that you think that you're
Yeah.
using.
Yeah. They have to
Um,
be taken in context of
yeah,
the larger market and larger trends.
yeah, you can't just go to a random spot on the chart and, enter in based on that pattern and then win money.
Yeah. How does like weekend trading or after hours trading work? And then like how much of a reset is the weekend in terms of like market behavior? Or is it kind of just not really much of a reset because things kind of are just always trading?
I would say sometimes it's a reset, but not every time for sure. Because like if you look at, if I pull up more of a 15-minute chart, if we look at, like trying to, let's see, Sunday. The last couple weekends are 31 and 24. So like this was a weekend, this was a weekend. I mean, I think it's generally it doesn't necessarily reset it, but I do like to come into Monday and see how things are going and seeing a potential for movement difference. But also I think a lot of times, like you're saying, because trading happens not 24/7, but pretty dang close.
Yeah.
And even when the market closes for the weekend, it does close from, Friday at 4 Eastern time or 5 at Eastern time, and then opens up at 6 p.m. Sunday. And so it is closed for like 2 days. But, here, unless something huge happens over the weekend, like this just looks like normal. Like it didn't
Yeah.
look like anything happened here. And
Yeah.
then before the market even opens, I mean, the market then opens up here on Monday. There was a lot that happened between now and then, and I think it allows you to just look at that data and kind of see what's going on. But of course, like that doesn't mean Monday could open up and a lot of things could change. So
Yeah.
I think Monday is definitely more of a day than the others to be aware of
It's potential
potential.
for trend changes or swing changes.
Yeah, but even like today, it was, it seemed pretty obvious that once the market kind of opened up and started ripping higher, that we were just going to continue higher for a while.
Yeah.
Just because, taking into account that big picture of, well, we had this huge V bottom from Friday and then, Sunday night until Monday morning and then opening up and having that rip higher
Heading higher and then
just because, yeah, it was pretty overextended.
yeah. Because what? Professional traders aren't trading on the weekend. They're only trading during
Yeah, I mean, like big banks and
market
stuff, yeah,
hours.
they're pretty much only trading during main market hours.
Okay. Okay. So I'm reading into it or coming up with an explanation that works, or for myself would be like, okay, yeah, non-professional traders or casual traders traded over the weekend, had a V bottom, and then Monday came in and professional traders are like, yep, we're ready to continue higher, and then just ripped it higher,
Yeah, I
which
mean,
could just be a story that fits the trend in an absolute, but
yeah, and it's also like just because, well, the US markets are closed, but like the other, like
yeah,
I
that's
definitely
true.
wouldn't
Yeah.
discount this data of like being like, oh, just because like main US banks aren't trading US shares and stocks doesn't mean like that this isn't a reasonable move that like
Yeah.
has meaning behind it. Because quite often it's like it's matching major moves happening in other markets that are open, like Asia or Australia or Europe. So I just view it as continuous data. Like when
Okay.
I'm drawing my
Yeah.
levels, I look at, okay, here's the most recent swing low, and here is a swing high that it had before it had this sell off. So like if we're coming up here, like that was my initial target of like, okay, well this is going to be an interesting spot to look for if it reverses. And also, that's where the market closed on Friday, and we had this kind of gap down. And then after that, there's not really a good these little swings. Like as the market's making these little swings down, I don't really like to just be like, okay, well I'm gonna make a level here, make a level here. You can't keep track of all these. Again, like the whole idea with looking at levels and zones is trying to identify the more significant ones. And
Yeah.
the reason why this one is significant over these other four is because this is where this sell-off basically started. And so
Okay.
that's where I would assume that, the whole idea of, okay, when a market has a big sell-off, it's going to fill that and give that back up, and it could then sell off again. And then
Essentially come back to
also,
equilibrium.
yeah, and then this is also where the market closed on Friday, and then gapped down. And so that's kind of like just another significant area to look at.
Okay. Yeah, I had a question on how you drew that level as well as the one at the bottom. Is the one at the bottom just because that's your most recent significant low?
Yeah. Yeah, I mean it's like we bottomed here and then bottomed here and then but yeah, the main thing is like, okay, well, if we get down there, I want to see how the market reacts to the most significant recent low. Like I guess you could zoom out and you have to go pretty far back to find a new one, and there is ones further down. But the most recent ones are more likely to have reactions than, ones where you have to zoom like, weeks out to find them, where it's like, okay, this
Yeah.
one's 10 days old.
Yeah, I was trying to figure out, or I guess had a question as well as like, how do you view the strength of like floors or resistance zones that are, I don't know, 2 days old, a week old, a month old? My guess is it just gets weaker the farther back they go. but like, do they just become irrelevant or something is still kind of there? I guess maybe also question is kind of like, what's a speed bump versus a zone?
I would say, yeah, it's like you initially said, as they are farther and farther away, the levels in terms of like, okay, 10 days old, 30 days old, 2 months old, if you kept zooming back.
Yeah,
Um, I don't consider those to be levels after a while.
yeah. Like that
Uh,
top one you have there. That's I think the one I was one of the ones I was kind of primarily thinking about.
Yeah, no. So one first idea is I want to see how it's gonna hit that level because it's been so long that it's for a far back level that you it's drawn. It's been so long since the market's even been at that price. A lot could have
Yeah.
changed, and so I'm not gonna initially think that it's gonna respect it because
Mm,
I don't know any recent market action around that level.
yeah. It's like the underlying variables are constantly changing. And so what happened? What is that, 2 weeks ago or a month ago?
15
Yeah.
days from here to here, yeah. Yeah, I mean, well, and also the other argument is, well, okay, we came up and tested this level, sold off, and then the market's, regained strength, and now it's, coming to test it again with probably more strength, and so it makes it more likely to break through it.
Essentially a giant V.
Yeah, like this is just a big, if we, zoom out even more to even just a daily, it's like this level, it's just a swing in the market of like it just come here and pulled back and now it's pushing through.
Yeah.
So it's like
Do you view that as like, okay, maybe something happens here, or like it is a point to pay attention to, but unlikely to
yeah.
influence the market?
Yeah, I mean, I would say, yeah, like with a big far level like that, it's like you have your levels like that are really, really solid, where it's like, like this, when this level was originally made and, you had it like this and the market was more looking like this, it's like
Yeah.
these were times where the level was really strong and you're more likely to
Yeah.
think that the markets are going to respect it and more aggressively trade at it
Yeah.
versus, when it's coming here, you think, okay, the level's probably weaker, but it's definitely a point of interest. And so how I would approach that is, okay, well, if, let's say if you go down to a 1 minute chart and the levels all the way like up here or something, and the market makes some crazy move, and you say, well, okay, today the market trend into this level is really overextended and there's a ton of signals showing me that I think that we're going to double top and we're going to sell off and give this short-term move back up that we've done,
Yeah.
then it's worth, I would still take the trade because there's still that area where it has the potential, and then all these other, smaller trend signals are giving you a big picture reason to bet that the market's going to go down there.
Okay. Talking about resistance zones, could you zoom back to that screen you just had up or time frame? So looking at the like, I don't know, 22nd to 25th, how there's kind of a resistance zone through those top little ones.
Yeah, like here.
Yeah, it's right through there. How do you, because I think that's one I drew at some point. How do you, or off the bottom of that maybe, but how do you think of a zone when it's like, it kind of seems like there's something there, but you also have candlesticks or little sections that go through it? Does
Here.
that kind of, yeah, like, does that discount that kind of resistance zone, or is it there's something still a little bit there and it's,
I think
again,
it
a
can. Yeah,
small
it's
indicator to pay attention to, but not a strong, it's like it's a little bit of a zone, but it's not a strong zone.
yeah, I mean, like I would say this is like it did basically did a failed breakout, whatever this like this is, I'm looking at the time at the bottom, like
Yeah,
it's the market's open right here, and so it did some kind of punch higher and then failed back in. Um, but it definitely like I think makes it so this resistance level is a little more tricky, like than likely I wouldn't be looking for like it to come up here again. I would think, okay, well, maybe I start tracking this high now. Because a lot of times when levels
yeah,
start to get broken like this, it's like, okay, something's going to start changing and it's either going to, sometimes it'll break out this way and then fail and then push out the other end. Or it could
yeah,
be like it's breaking and then comes back and then breaks it again. And actually, like, that's where it finds the actual strength to continue higher without failing back in.
yeah. Looking at the bottom one for those, yeah, that one there. Yeah, I did something where I kind of pulled that pretty far across for looking for when this whole thing kind of comes back down. Yeah, through there.
Yeah,
And it seemed like it kind of worked, but it was also felt
like
like
it
something
bounced
where I was
here.
just, yeah, it seemed like it kind of worked, but also something where I was kind of just like hunting for something. Is that like,
No, I mean,
is
I
it
think that
strong enough or?
I think it's a good, like, my assumption with this move up, and then if it when it started to really like rip like
Yeah, lose its 2%.
this move, like if the idea of it's gonna give this whole move back up, I would think that it would somehow come to this zone and find support. It doesn't have to
Okay.
necessarily be this support level, but
Yeah,
I would
maybe
think,
view it as a bigger zone.
yeah,
Okay.
like this is where the market was chopping and gaining strength, and then it just took off. And then it failed. And so like that's, where I kind of just, with the idea of, okay, it's going to give the whole swing back up. If it
Yeah.
fails, that's how I would read that. So that did kind of essentially align up with that perfectly.
Yeah.
So I mean, I think that that's a good level and target to be looking for that. I mean, like during
Good
it, I'd
good
be,
thought.
yeah, I mean, like I'd probably just be thinking like, okay, it's going to come down here somewhere.
Yeah.
And then,
Okay.
you go into a smaller time frame and look at when it actually bottoms.
Yeah. But even, yeah, I guess, and then leads into the next question of like, when it rips down like that, how do you even, I mean, maybe it's something where it's like, yeah, no, you just don't really think about taking a trade in there because it's moving, has so much momentum and it is moving so much in one direction. Like, okay, it's in a little bit of a zone. It's making a little bit of a, I don't know, tiny bounce or mini pullback or whatever.
Mm-hmm.
Like, are you looking of like, oh, hey, maybe there's something here? Or is it just there's so much momentum and so much downward pressure? Yeah, I guess it's somewhat of like the how do you determine the balance between what is unhealthy overextension and what is just a lot of downward pressure? Because it like in the 15-minute chart, it's just like two or three candlesticks that rip down through this. But like
Yeah.
on the 1 minute chart, you see a lot of those like little tiny pullbacks or like mini consolidations. Yeah, yeah. So they're like, yeah, like that.
Yeah, like this is a 5 minute, and then yeah, here's the 1 minute.
Yeah.
Um, yeah, because this kind of move is like this is something that doesn't happen very often.
Yeah. So maybe it's
Um,
irrelevant, not irrelevant to talk about, but
Well, it's just like it's like so, sometimes you're like, oh well, yeah, and this is a great example of the dream of what you could do if like if you did somehow, like you're saying, here was it bottomed like almost exactly at that area, and oh, if you went long, it's like you would have caught like somehow, you would have caught like a huge move back up, and I find it really hard to actually do that. Because like trying to determine, okay, yeah, like this is what's healthy versus unhealthy. And even in this trend, there are pullbacks, and like all these trends are, it's every trend is going to eventually reverse in
yeah,
some way.
it can't continue forever.
Um,
But
but in terms of like trying to figure out like, okay, if we have a huge move like this, that means, well, eventually it's going to have a huge reversal, like even looking at a 15-minute chart here, it's
yeah,
like it did pretty much give back, until like the market closed, like it gave back like 80% of the move before it eventually continued to sell off further. Hindsight, this is definitely was an unhealthy move, and it did reverse like middle of the actual trading day. But I guess in terms of trading it, like, well, first off, like looking at like more my timings of like thinking about reversing,
yeah,
like the early moves, like when it moves so much in the first 30 minutes like this, because here's like the first 30 minutes, first
yep. Those are 10
45,
a.m.
where it's like, okay, this is how much it's moved in the first 10 minutes, which is a huge amount. It's kind of hard to look, I guess that helps comparatively to normal market
Yeah,
movement. But zoomed in is kind of hard to tell because there's nothing to tell against. But I always find like the momentum's just way more likely to continue lower. And like, something like this where you think, okay, well, here's the final attempt to go lower. And then we got some bullish candlesticks here where it's like could continue higher. And then, you think,
yeah.
okay, well, what if it gives back this whole move?
Is it setting up some sort of head and shoulders?
Yeah, like it's easy to start to look at those micro patterns again and get too laser focused on them when again, like,
Yeah,
okay, well, the big downtrend is telling you that there's a ton of momentum lower, and a ton of momentum like can just kind of defy like the norms. 99% of your trading time is like spent in more normal market conditions. Like, yes, they go back and forth from like, having like decent moves in a day and like choppiness and then like a spike and lower and trending days. But like very infrequently do you have times where the market just all of a sudden just some news is behind it and there's just some craziness. And so I almost try and stay away from those days because
It's not behaving in a normal pattern.
yeah, and like what you're trying to do over time is have your strategy that you do every day, and if the market doesn't fit that, you move on. And a lot of times, like the market doesn't. This isn't the market fitting that, because it's not making a like an unhealthy move down that you think is going to reverse. It's making an extreme momentum move down that could be an unhealthy move. But in my experience, most of them will move down and then they can still have some big moves up, but a lot of time they'll just go into like a sideways chop or like a slow bleed lower or maybe even like a slow grind higher with some pullbacks that are just like really hard to trade in. And so I think trying to determine like what's an unhealthy versus like a really big momentum move just comes with kind of experience of seeing the market. Like this morning even, like this seemed like it could be an unhealthy move.
Yeah.
Because the market just opened up here, ripped up in the first 30 minutes, and then had some chop here, had one more push higher, and then started to kind of sell off here, and then it actually had this candlestick where the market went up and sold off in this one candlestick here. And so my thought was like, oh, well, that looks like it could be basically at the top.
Yeah.
And it could start to sell off and give this move back up because that really aligns with, my strategy of seeing a move, hit a zone, happens in the first 30 minutes. But if it just, ripped up an even bigger amount or just, here it's that signal didn't fully develop, it just continued higher. It's like, okay, well then there's just more momentum behind it and I'm just going to move on with my day.
Yeah. Yeah. I think I watched it to about, what would it be, 11 or so?
Yeah, because then, I mean, like even here, it's like big move up and then and this is why a lot of time I've stayed away from being like, okay, well, and I've tried it in the past, like, okay, well, if I don't think it's going to reverse, well, why don't I bet it's going to go higher? And it's like that the hard part is a lot of times it's like, well, a lot of the big move has already happened. And so you're betting on a continuation of this trend becoming an even bigger trend.
Yeah.
And like today is a perfect example where it just went up and just kind of sat there.
Yeah, or it seems like it's just going to make a little flag. Like we shot up and now let's consolidate over a small period of space.
Yeah, so I mean that's just like such a hard part about trading is seeing all these different things in the market and thinking, okay, how can I profit from this and how can I profit from that? And in reality, that's trying to fit what the market's doing versus waiting for the market to fit what you want and just taking advantage of that, even if it doesn't happen very often.
One of the questions I had from this morning was around how the ES and NQ interact with each other. And so I think the way it worked this morning is so that resistance level or zone that you had drawn there, the ES hit it first. And so it was like, okay, if essentially like, okay, the ES hit this first, the ES might reverse here. Would you expect to take a trade on NQ if NQ was following ES? And then similarly, when NQ hit that zone, would you expect, if ES has just continued shooting upwards, would you expect NQ to reverse or just kind of keep following ES up through the zone? Does that make sense?
I think I need you to say that again.
Okay. Essentially, it's just like understanding more about how ES and NQ interact and follow each other. And so if one hits a support zone or a resistance zone and the other's not at that zone yet, do you expect the other to potentially reverse if the first one reverses? So for instance, if ES hits the zone and reverses, do you expect NQ to reverse wherever it is, even if it's not at a resistance zone?
Okay, so yeah, I think I understand your question. Like, how do ES and NASDAQ correlate? And when one's hitting a zone and one's not, will the other one like catch up first, or will it just kind of reverse where it is?
Yeah, or in some ways, it's like if one reverses, do you expect a reversal in the other?
Okay, yeah. So I mean, I think a lot of it's how this kind of goes back to I think my rule of like I need them to both be trending the same way and acting the same way, very similarly at least. Like,
Yeah.
you know, this morning it's like let me try and just get these charts to like almost match perfectly. Is okay, so this is pretty much the same point in time, even though the chart there's more space here. You know, the NASDAQ had these big spikes and flags this morning where the
Yeah.
ES was almost more just kind of like continuous chug higher. You know, maybe you could say there's a low flag here, low flag here, and then it had that spike.
Yeah.
But you know, that's without reading too much into the candlesticks, like just at a glance, okay, the trends are basically the same. Like we're just
Yeah.
opening and moving up. And so I view those as okay, they're both correlated. They're both going to be pretty much doing the same thing. You know, one might make like a little bit of a divergence here was okay, the ES made a high here and it sailed off like this far, where the NASDAQ made a high here and sold off like just not as far.
Yeah.
And so, you know, it's like there was a little bit of divergence there. And the thought was like, okay, well, if I take a short, will the ES sell off faster and harder than the NASDAQ? But both of them, I think, would sell off. Even if, like you're saying, the NASDAQ is at like a resistance zone and there's this downtrend that I had drawn this morning from like kind of the big picture of these like swings. Okay, we're coming up to this area. You know, if we hit this, how does it kind of like sell off when it, if it is going to? Even if the ES wasn't at that level, like I would still think that, okay, the ES, it would sell off too. I
Okay.
would say that it makes it kind of less likely for it to happen though. I would say the better setups and trades happen when both of them are at a clear reversal zone.
Okay. At the same time, essentially.
Yeah, because it's
Yeah, because
you know.
that was part of my question this morning is that it seemed like the ES hit the resistance zone while NQ was still like in between resistance zones or hadn't got to that same point in time. And then it did later on, and I think at that point ES had continued through it.
Hmm. Yeah, I mean, I think it's just another one of those things of like trying to have things line up really well, you know, and that's when
Hmm.
you know, you bet on the outcome. Just because it's just another variable where, you know, the quite opposite thing that I see often is like, okay, the ES just opens and sits there while the NASDAQ opens and spikes in a direction. And so, you know, I used to think, oh, well, if the ES isn't moving, maybe that shows weakness in the market and the NASDAQ will just give this move back up.
Yeah.
And that doesn't like, it's a lot harder to predict what's going to happen when they're not moving together.
Thinking about timings in the market, and you focused me around the most of the time, specifically around the 10 a.m. one. How, like, if it doesn't reverse at 10 a.m. and kind of just continues through that, or doesn't have a major change like around that, do you expect that when it comes to the 11 a.m. point, that it's also going to kind of just continue through and follow what it's been doing, or is that another spot where it will,
No,
there's potential for reversal?
I think the 11 a.m. is the other spot where you would say, okay, even if it's been trending up since the whole market opened, if it, you know, comes up to a resistance level and the, you know, uptrend gets broken and you see something like a double top or something, and
Hmm.
you think that the trend has the potential to reverse, I think 11 o'clock is another window where you can look for reversals. I don't think a lot of time at that point, it's not as much of an unhealthy move that gets reversed. And it's not necessarily going to move like very quickly versus like in the morning, the spikes up can be reversed a lot quicker if it's like at, you know, the
Okay.
9:45 time or the 10 o'clock time. So like these moves will be a lot more like slow grind lower, but you can still
Get them. Okay, so
capture a big move.
it's like the 7 a.m. was often going to be more focused around an unhealthy move, while or 7
Yeah, the
a,
10 a.m.
10
Yeah.
a.m. is going to be focused around being an unhealthy move, while the 11 a.m. is going to be more focused around not structural, but just like a more of a shift in the market than something being specifically unhealthy.
This move right here, I think you mentioned this earlier, like pretty much bottomed at 11
Yeah,
that
yeah,
day. And so it's like pretty much everything lined up there for it was at that reversal zone. And then this big move, you know, bottomed around that time.
yeah. So how do you think about it when it gets into like, because I saw this and I was like, okay, it's done its It's done as two little bottoms. It's then shot up for a little bit, but then
Here.
it kind of just, yeah. Well, then even before that, like that initial part, and then it gets into that chop, and
Hmm.
that was when I was like, okay, I could like it's just gone into chop in consolidation, and so now it seems like it could just continue down or continue up, and then it obviously continued up.
Yeah, I mean, I think it's basically like you're saying, like an inflection point. Like I think it's a big decision spot of like, okay, is it going to continue lower and just be like a downtrend the whole day? Because if you're looking at like, just this trend, it's like it's basically
Yeah,
coming up and testing this previous swing low.
yeah, yeah,
And so it's like, okay, in terms of a stair step pattern, it had this big aggressive trend, and that clearly is changing after this move up, but that doesn't mean like it couldn't continue lower, right? It
yeah,
could just be shifting from, okay, a huge spike of a trend to like more of a channel style trend.
yeah,
Um, that's more of a
mm,
broad trend.
yeah,
And so but that's where like having that big resistance or support zone comes into play of, okay, well, that maybe makes the odds of it breaking through this a little bit better because you think, okay, well, the overall trend could shift because of that major support zone. And then, you could see this as a short term like bull flag as well.
yeah.
So it's one of those spots where it's tricky to know exactly because a lot of this could go either direction. There's reasons to support either, especially because this, trend was so aggressive and had such momentum.
Do you ever trade off of those bull flags as a like indicator to get in once you see that it starts continuing higher? Or at that point, is it just like okay, it's continuing higher, I can tell that, but it's just lost, or it's like potentially moved significantly through whatever amount of move it's going to make, and then there's just not necessarily enough room for the trade.
Yeah, I mean, for my trades, I like to be trying to target getting in down here.
Yeah,
And once it comes up here, the thought is like, okay, well, a lot of the move has
value.
already happened.
Yeah,
Like the
yeah,
easy money has happened.
yeah,
And so it can get to a spot where it's like, oh, okay, well, why is it doing this? That, reduces kind of the confidence in the potential of the trade.
got it. Yeah, you're limiting your upside. Okay. Have we talked about setting levels at all when things get super high? I guess maybe we talked about like really briefly on the phone of how do you trade when market seems to be hitting all-time highs
Yeah, like even, let me bring up 15-minute
or
chart.
monthly highs.
Yeah, or it's just like, I mean, even sometimes, like a lot of times, it's like, oh, it's just making new all-time highs. Like this, where the trend is just kind of like up, and there's no, like every day it's just kind of doing like this, it's continuing higher and higher, and there's nothing to
Yeah,
look back to the left side.
yeah, yeah,
I mean, pretty much you're just sometimes I'll come in and I'll look at, okay, well, if the market, opens up here, I'll think about like, okay, well, there's this little mini zone from overnight, and I'll see, okay, well, what if the market comes up here and I look for a bounce off of this zone, or it can open up like this where it's kind of like in this chop range. This isn't a great example, but it could be like doing like this. And
mm-hmm.
then if the range here is big enough, I'll almost look to like trade between this.
Trade in between it. Okay.
Otherwise, just
Just
ruin
kind of
it.
enjoy the show.
Yeah, I mean, otherwise, like it's just like you just gotta wait it out. It doesn't happen forever.
Yeah,
Eventually, it's gonna start doing this, and you can say, okay, now here's a zone, and like here's a zone, and then trade in that, and then it shifts to this, and then it's just a part of always adjusting to what's the market doing.
yeah. And being patient. That seems like a key
Yeah, I mean, it's like not
or
every
the key.
market condition is gonna work. No strategy can fit every market condition.
Yeah. And so don't force it.
Yeah, yeah, you just want to all biggest thing is you want to just try to be waiting for the market to come to you, not going to the market.
Yeah. Shifting to talking about trend lines a little bit more. How often are you like redrawing them or adjusting them? Seems like it'd be super easy to do kind of fairly consistently. So for instance, like I don't know, in that large downwards trend there,
Like
like it'd
this
be easy
one.
to draw. Yeah. Like it'd be easy to draw one from, oh, I can't see the bottom. What is that? 10 right there to one of those highs a little bit lower and then or draw it like before you know the whole thing, putting it at the top of that. Like it seems like it'd be really easy to constantly kind of draw them,
And then like
hitting
just be
different ones.
adjusting.
Yeah, yeah. And so kind of like what's like the difference between like adjusting versus a breakthrough versus just kind of a really poorly drawn trend line. Like, because you could have that one there. I think I did this. Like, I drew one there and did that one to then to that, and then
This.
yeah, like, and you just kind of end up with them
Yeah, you could have them just all over the chart. I mean,
everywhere.
you know, of course, it always just ends up being kind of subjective because it's a subjective thing at the end of the day.
Yeah,
I try and do it only, like, have them only if it's like, it's super clear that that is a trend line. Like,
yeah,
I think this one is pretty dang clear because you have, you know, here, 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 and then it breaks. But that doesn't mean like there'll be times where, you know, the market, there is this trend line and then it starts to go into something like this and you don't, you know, adjust and this still fits or something.
yeah.
Like it
Or
could just
fits
be,
reasonably well. Yeah,
yeah. And then, you know, okay, you see this and it's like, okay, well, I can now adjust to like something like this, taking into account these three. But then, you know, it breaks here. So I'm like, okay, well, I'm just gonna discount this because by the time the market comes all the way back to this, it's most likely, you know, it's just like a support zone. It hasn't touched it in forever. And the trend has clearly like changed and started to do something different. I'm not gonna expect it to come up here and like continue to respecting this downtrend. Like that just not how it works.
yeah,
Like they usually stay in, even though it's like you're doing a trend line, quite often the same thing you can still basically do like a channel, you know, and it's like, okay, it's respecting like a channel and like you can match it on like the other side or somewhere, you know.
yeah.
And once it kind of breaks that, it's like, okay, well, it's probably just gonna not
It's
respect
not
it.
going to conform to that again anymore. Yeah.
Um,
Okay.
yeah, I mean, same thing
Yeah.
with like this right here was like this morning we kind of had like a channel and then it broke that. And so I'm like, okay, well, I'm just going to delete these now because clearly this doesn't matter anymore. You know, like the market's just
Yeah.
skyrocketed from there. Same thing with like just on a 1 minute of like trying to, you know, adjust to like, okay, well, there's some kind of trend here or like, did we change and adjust to like something like this? I think a big thing that throws people off and threw me off in the beginning is it doesn't have to be like at a major swing or
Yeah,
like the
that's
bottom of a swing. A lot of the times, a lot of the trends will do what I call is like a spike and then trend. And so like it'll have like a big move up and even it could be all the way up here, it doesn't matter. Like it just makes a huge move and then starts to go into something that's more constructive.
yeah, that was I ran into this literally this morning of like, okay, do I draw it there or do I draw it off that
Mm-hmm.
bottom point where it's makes the high spike and then actually seems like it goes into a
Yeah.
mini channel?
Goes like in, yeah, I mean like on these two charts like this morning was, I mean there's not a good trend line that fits this, to be honest. Like it's just like a funky weird
Yeah,
like spike trend, and so it's like you don't have to fit something, and just because there isn't a trend line you can also just be like, okay, well, even though a trend line doesn't fit this, I can tell that you know, here it's like the trend is still in place because the trend right now is spikes, go sideways, spike, go sideways, spike, go sideways. A little bit of a pullback, but spike, go sideways. And so it's like you can still tell like the market is still doing the same thing. And that's all trends and trend lines are really telling you is the market continuously doing what it's been doing, and which makes it more likely to continue doing that, you know?
yeah,
And then
yeah,
once that breaks, then you're like, okay, well now it's over and I'll expect something to change.
yeah. Is there a time frame that's good to draw trends over? I guess I found myself in a couple places drawing a bunch of like really small trend lines. That's like, oh, there's a mini trend there, or there's a mini trend there.
Like
And like,
this.
yeah, yeah, or like something almost like that. It's like, okay, yeah, you can draw something there, but is that even relevant at all to what we're trying to do?
Right. Yeah, yeah. I mean, like you can just mark the shit out of your chart if you really want to.
Yeah,
I don't think you want to do that. I mean, even though it's like you're looking at, you know, you can look at a 5 minute chart and a 15 minute chart, and you can look at a 1 minute chart, and those are like zoom ins or zoom outs, like that I'll look at because you can definitely see bigger picture trends and stuff on those different charts, you know, like with this stuff.
yeah,
But same kind of thing with support and resistance levels. Like I only want to focus on the main ones that are like really clear.
yeah. The ones that actually have
And
strength behind them.
yeah, and well, and even like here, it's like, okay, well, you can do, you know, like you were saying, you can draw one like here and, you know,
Yeah,
here and here. It's like instead of doing that, like think about, okay, what is the more bigger picture? And that's you know, that like trying to find some, I mean, you know, this isn't a good example, but like looking at the main swings and seeing, okay, this is clearly like the trend that it's in, and I don't need to draw little trend lines for each of these spikes of the trend, and then, you know,
Yeah.
trend lines for the pullbacks of these trends. Like you're just trying to, you know, at the end of the day, all you're trying to do with all of this stuff is just help you figure out like what the main idea and main picture of what's going on is. And you know, again, like with the philosophy of the big picture is important, and all these little micro moves are really just a last minute thing to confirm where you're going to specifically enter in your order.
Yeah, but really it's what is the big picture?
Yeah.
Okay. Okay, that's a good thing for me to work on for next week. Oh, I guess for assessing health in the market, like what chart are you trying to do that on to some extent? Because a lot of the time, like if you look at the 15-minute chart, it'll just be steady blue upwards or steady blue downwards, or not blue, whatever your colors are.
But yeah,
White.
like steady up or down.
Yeah, steady up or steady down. But if you look at the 1 minute, it's got little consolidations all over the place. And like similar with 5 minutes, like, yeah, I guess it seems like it can look unhealthy on one chart, but be a little bit more healthy on a smaller time frame. And so is that like, are you assessing the health on a larger time scale or a more narrow time scale?
Yeah, I mean, I look on a 1 minute, but like generally it's easier to identify it on a 5 minute. Like, especially if you use like a fair value gap indicator that just gives you, you know,
Yeah,
like the
like, yeah,
boxes
yeah.
just to like really like tell you, okay, here's where like the overextended moves are. But like on a 1 minute,
Mm,
you know, like you're saying, like there is the like,
yeah, there's all of that.
yeah. And so
I guess part of my question is like, does that then not invalidate what's happening on the 5 or 10 minute or
like
5 or 15 minute
the
chart?
little consolidations,
Yeah,
like on a
yeah. Or
small
are
time
they're
frame.
just small enough that they like don't really matter?
Yeah, I think it can be small enough to where it doesn't matter, especially if you're looking for more of like a 10-minute reversal or like an 11 o'clock reversal. Like on a
Yeah,
big, you know, the 5 minute, like you can still tell that it's overextended. Like even like this, like looking at, you know, the move we had today, like I would say looking at this on a big picture, 5 minute, like this is a pretty big move that if it fails, like it'll definitely come back down to here.
yeah,
You know, and even like on a 15 minute, like that's a big spike up that totally could reverse. Like, you know, of course, like it could just be a bull flag and continue higher, but like the idea that there is,
opportunity.
yeah, like going back to what we talked about, like there's not really that much between the, you know, the only previous swing is this. And so from, you know, if it would at least come back down to here, I would think, if it's going to give this back up. And so like there's a lot of
Mm-hmm.
opportunity here of potential, like I guess, void in the market for like it to find support easily.
Yeah,
And so, yeah, like, you know, even though there's this consolidation now, like it still can, like, you know, even though it's like, oh, I like to see it fail right away, it can and will most likely still have times where it does, you know, maybe it just needs overnight to happen and then tomorrow it will reverse, you know,
yeah.
stuff like that. Like you can always just zoom out to a 15-minute chart and it's like this move too. Like this move moved up and went sideways for a while and then was given all the way back up.
Okay. I think that's at least all the main questions I have, or at least has given me plenty to think about. So
Yeah, I mean, do you think it makes sense to like get you set up for trading stuff, or just still focus on that? Maybe like you could put the fair value gap indicator on your chart, and you know you can just be thinking about that stuff more and like thinking about the 5 steps.
I think
Because that was a lot, and there's still like, you know, just another week of looking at the
I
market
just
can be
need time
really
and grade.
helpful.
Like, yeah, just looking and not pushing it too much. I think putting the fair value gap would be super useful because that just gives me a better idea of like we got a little bit of idea of when unhealthy it is and stuff like that, but having something to just, I don't know,
Yeah.
help confirm it. Because a lot of my notes on my chart are like, was this unhealthy? Is that unhealthy? This seems like it is.
Yeah,
I
and
think,
so I think for that, like you can put it like on the 5 minute, but then also you can also put it on like the 15 minute.
yeah,
Because the 15 minute is, I think the 15 minutes more clear of where the unhealthy moves are. Now, sometimes the 15 minute isn't enough for if you're catching like a 15 or 30-minute reversal in the morning. But big picture,
Yeah,
you'll
for a
be able
quick
to
one.
see like, yeah, like this is, this is a great indicator that this is an unhealthy move that we did this morning. And maybe we just come up to this area and sell off tomorrow and retest this low or something even.
Yeah. How does that work for instance, if the market opens tomorrow morning, I guess obviously we have all the overnight trading or after hours trading, but if it just starts going down immediately, are you looking at stuff that's happened before market open for it's like, oh yeah, there's a head and shoulder or it's already tested this before market open and then starts going down? Are you jumping in on it or are you like didn't hit my reversal or didn't hit my pattern and entry during market open hours?
I would say I try and stick to waiting the first 15 minutes to see that, because a lot of times, like, I have done times where I'll just, yeah, for some, like, I think, oh, this is doing a double top, and, all the signals are there, and it looks like really good to sell off.
Yeah,
Um,
but
and
most of the time you're trying to give it a little bit to figure out
Yeah, and I,
what
I
the fuck it
would
wants to do.
rather see like it, spike up and attempt a new high and maybe fail in the first 15, 10, 30 minutes and then enter in on that, because that's like a great signal to go short. And personally, like it feels a lot more methodical and repeatable to do it that way versus like there have been times where I've caught like a crazy sell off, like the market opens, and it just like sells off right away. But those always kind of felt a lot more of like trying to predict a little bit more aggressively
Yeah,
than
a lower
sticking
confidence interval.
to my strategy and like what I feel very confident in.
Got it. Okay. Well, do you want to show me how to install the fair market value?
Yeah, I mean, all you do is it's in the NinjaTrader platform. So you just click this little, I don't know, it says indicators, but it
Yeah.
looks like a little chart almost. And
Oh,
then
and
you
then just
just
search for it.
Yeah, you just type fair in here and then you just double click it to add it to the chart.
What's max FVG?
Just how many that it will show. Like each one of these is a fair value gap. And so, like if you scroll back, it's only showing 40, I think on mine, and that might be the default. And so if you want more, you do more. So there's that. The basic settings work pretty good.
It looks like the base is
It might be 10, but
10.
yeah, I mean, like, I don't really have a number. The main thing is like, okay, I want to see the most recent swing that I'm looking to see fail. Like, I don't really, like looking at a 15-minute chart, like, I don't really need to see, even though this big one here still, like, technically is not filled yet.
Yeah.
I'm not really looking to use that anymore. Like, I'm really looking to just use this one.
It's another one of those things it's too far back.
Yeah, and
for the most
it's
part.
gonna eventually fill that, but like the main spike reversal move has happened from that one.
Yeah. For the time frame that you're looking to trade on, it's not very relevant anymore.
No, like if you were like looking and you were down here and you were looking to trade over multiple days, like then that's something else, but that's not what I'm doing.
Yeah. Okay. Cool. I got it installed.
Okay, so
Episode 3.
I mean, I guess first thing is like this week we want to try and get you ready for trading. Yeah, so I guess we want to try and get you set up with like the indicators I use or just the quality of life things for NinjaTrader that I use, and then we can talk more about like actually entering in trades and how to execute that stuff. And we can go over the strategy a little bit. Like I have this PDF that I made that I can send to you that kind of just has like a nice like quick overview of each of the like 5 steps. 6 steps, I guess, if you count trade management. And so I can send that to you, and anyone else that wants that, I can put that in the description below of the video. From what I understand is like you have a rough idea of the strategy, and I think talking about like we can talk about some examples. Like today and yesterday I had great examples and some trades I took last week, and kind of talk about those, and we'll probably really hash out.
Yeah, I'm getting more to the point where like I can figure out where kind of the first 2 things are happening. If it seems to be getting into a zone of something seems like it could happen here, but then I'm not quite sure what I'm looking for to tell me what's going to happen or what I should be specifically looking for.
Yeah, that makes sense. Yeah, I mean, I guess we could just talk about I'm just thinking like maybe it makes more sense to do like give you the indicators and that kind of setup later,
and we can talk about kind of the trade setup that happened this morning and some chart examples. You were watching the market this morning. What did kind of, we had this spot on where the market opened up here, at 9:30.
Yeah.
And then we came down to this 15-minute timing. And kind of the levels I was looking at into today was just kind of this range we had.
Yeah, those are the same two that I identified and was looking at. And then I had some other larger, oh gosh, wrong button.
Some like zoomed
kind of
out
like,
ones.
Yeah, zoomed out of like generally the market's been going up and having upward pressure, but obviously for the last, day or so, it's been in that little channel.
This is just overnight. Market closed.
Yeah.
I mean, this is the overnight close line right here.
Yeah. Okay.
But this is definitely like a common thing where a lot of times like the market will have some spike up and then like it'll be in this channel.
I saw it kind of going along this channel, and so I was thinking it's probably going to do something where it's just keep bouncing in between the two. And so then we got into that spot that you were looking at, and I think I was looking at it more on NQ because it was just down closer to the resistance or
the
I guess
support
floor. Yeah, and so I was looking at it there. And so here I was like, okay, it's done one little bounce, and then the next bounce is lower rather than higher.
Yeah.
So I didn't quite see something super nice to like get in on. And you're obviously looking for it to break that trend. And so then it like kind of broke it and just went straight up. And I was maybe hoping that it would do a little like head and shoulders pattern, but instead just ripped up.
Yeah, I kind of pull back here.
Yeah. And then I saw you posted something about what it was looking like on the ES. And I was like, that's much more clear of a like comes down and then goes up.
Yeah, like the ES had much more of, like a head and shoulders where it had a spike here and then it made a new low.
Yeah.
And then instead of, I think this, where NASDAQ made a new low, like you're saying,
Yeah.
the ES just made a new high.
Yeah. Yeah.
And so like I wasn't trading this morning really, but yeah, getting in kind of above here would have been where I would have got in because you would have been getting in on essentially a break.
On that. Yeah, because you're looking at to break that long candle or wick, right?
Yeah, the high of this candle. Like the problem is like it's a little more congested of a bottom. Yeah. Like it's not like a nice clean where it's like, okay, you see it pull back here and then you're like, okay, well when it breaks this, I'm going to get in.
Yeah.
Like it's still doing that here, the price, but it's definitely very
condensed. Yeah, it's almost like it did it all in that.
It's more like it's doing like this, and then you're like, okay, well I'll get in when it breaks that, essentially. Because it still kind of does a little bit of a pullback. And I think the idea is like it's still showing you that the downtrend is slowing down and it's like losing momentum, because we had big spike here, a big spike lower here that made a new low, and then it's just kind of, instead of, you'd think there would be follow through with this bearish candle right here because it's just a big bearish candlestick, so you'd assume, okay, the next few candles would go down, but instead like it does another choppy candle and then it makes a new low by like one tick, and so then it's like, okay, well if it reverses all the way up here, that's going to be pretty strong,
but it's probably going to keep going.
It doesn't like get as far down as the NASDAQ did. Like the NASDAQ
went all the way down to the resistance floor.
Yeah, where is it? Yeah, like it came down and like tested it much better, and like here it actually broke it on the 5 minute, so it did a minor breakout. But like, if you think about it big picture, it's like, okay, it's still coming down to this low area.
Yeah,
like really like having your box
if you
up
drag
here,
the low a little bit bigger,
like that's better. Totally fine. And so it's like it didn't really like miss that, and even if you just think about, okay, well it came down to where this originally bounced.
Yeah.
And then it kind of exploded.
I've had a couple of the spots where it kind of gets down and does that little consolidation thing. I don't have a good indication or gut read on whether that's just a consolidation and then it keeps going lower, or whether it's a consolidation and keeps going higher. Like, I've got it down that that's a decision point for going one way or the other, but...
Yeah. I think for me here, so like the big thing with this common pattern where the market, is in like an uptrend and then it does this overnight range that you're going into in the market. I often think, okay, unlikely that the market stays in this during the day because it's such a small range. It's just overnight, these are definitely minor levels. They're not big, like, levels off of a 15-minute chart. But I still think they're important because they can, just because trade on a 1-minute chart, and if the swings are big enough, they can still produce a good trade. The main thing is I generally think of, okay, well, I just want to see how it reacts to these zones. Like if it comes down here, is it going to bounce and I can get a swing? Or is it going to come down here, bounce, and then break, and the move for the day is going to go lower,
Yeah.
And I think a big thing is like, okay, the big uptrend, we're in an uptrend right now. And so for me, that puts my bias more of, even if the read or I'm a little less confident in reading into the candlesticks here of having a clear signal, I'm going to say, well, I think my bias is more to the upside because it's likely we do a fake lower and then, break to the highs and potentially trend the rest of the day. Versus if it came up here betting that it's going to go short, I think that's a weaker of a play because, again, the big picture is the market's bullish.
Yeah. Like in the big picture, this is kind of like a consolidation and then you keep going up.
Yeah,
because
and so
it's been going up.
Yeah, so even though, on a 1 minute, you're taking a reversal trade right here, you're really big picture, you're just buying a pullback that you're expecting to continue higher.
Yeah, because overall, you're thinking about the big trend.
Yeah, and,
maybe...
Yeah, go ahead.
Maybe something that would be helpful, and then I had a question on from last week was, could you kind of talk through about market activity over the day of because it always seems like it starts off really energetic and then kind of slowly slows down over the rest of the day. And is that a fair assessment or?
Yeah, I mean, I think that's why I only stick to really like the first 30 to an hour, minutes to an hour, just because pretty much when the market opens, there's almost always volatility, or that's on average, that's the highest amount of volatility in the day.
Yeah.
Or volume, which would create volatility. And then as the day goes on, it's way less likely to...
Things just happen slower.
Yeah, things either happen slower because the volume has gone down. And like today was a great example. Like we had great swings in the morning. And even here, there was like funky swings. But as time goes on, a lot of the time is it just starts to dwindle and like this volatility gets reduced and reduced and reduced. And even like here, like it made a swing like all the way to the downside. It's like trading in this is like really almost impossible, I find.
Or it's just not as consistent.
Yeah, I just find it not as consistent. And then also for me, just the trading, you can come in, capture, or be available and ready to take a trade during the times when there's really high volatility on average. Because again, like you have to think about, okay, can I do this every single day,
Yeah.
And I find it way easier to focus on this beginning part of the day that often has volatility and then just leave and not even think about trying to wait for this. Because a lot of times it's like, I just get so bored even sitting and watching this for an hour or like 2 hours, it's like some days you'll have crazy movement the whole day, but it's so rare that on average you're just going to get so bored and drained and
you're just going to burn yourself out.
Yeah, and you're just going to burn yourself out and when you're burned out and like you're not focused in trading, you're just going to make mistakes.
Yeah. No, something I definitely like about your strategy is that you can kind of sit down and do it for like an hour, hour and a half in the morning, essentially before anything else happens, because at least on the West Coast, it opens at 6:30 in the morning.
Yeah, it's an early morning, but it's
nothing else
quick.
is happening at 6:30 in the morning. So after it went through this whole upwards, then I was watching it through here. And to me, it was like, okay, it's made kind of, I guess the way I've been thinking about this is I've been looking for like head and shoulders. And so I'm like, okay, there's shoulder one now, or like bounce one. Now I'm looking for a second bounce, and it kind of does that. And then it just pukes lower.
Yeah.
And then like immediately comes back up. And it's like, okay, I think ultimately it kind of forms like something that looks a little bit like a head and shoulders. But it's also just like over such a long period of time. And maybe that's like an acceptable period of time and I just don't know what I'm looking for, which is completely accurate.
Yeah, so there's a couple things here. One, for me, when like one swing happens like this, I find it rare that another swing happens.
Happens back.
It can. And so like I was definitely paying attention to this too because I still thought there was potential. I thought there was potential for the market to, if it comes down to here and it breaks lower, it's like that's a big trade.
Yeah.
And so being open-minded to that. And so and it was this was a super fast move up, and I would say unhealthy move that had reason to give up. And like you're saying, like I wouldn't want to short here, or even like sometimes I'll just look for a high and then a lower high and then go lower, and it won't set up really a full head and shoulders.
Yeah.
But like this is something that I've realized you don't want to get in on. Like you don't want to just put an order down here, expecting it to break this chop range and then, get in if it does, because often this can it can break lower and push higher. Especially on a day like today when the bias, at least my read, was like, okay, major uptrend.
Upwards bias.
Like I think we could just it's more likely that this just continues to trend higher. But, when it had this big crazy candlestick that then failed back in and I think broke this little minor support here, like, once you start, I think, reading into kind of the candlesticks there and the more micro patterns, I think it's really opens up the door to take a trade to the low side.
Okay.
The problem is, obviously, this candlestick is huge. Yeah. And I'm not going to just put in an order below this level and get in short there. Again, like I still same philosophy of like I want to see that head and shoulders, that lower high happen, because in these instances, like you can have these big candlesticks that just all of a sudden rip lower and then like reverse.
Yeah, because in and of itself is a pretty unhealthy move.
Yeah.
I guess one of the things I've been semi-struggling with is letting the market tell me what's happening versus trying to predict what's going to happen. And so essentially, like, how many candlesticks do I need to let it, and maybe it's some of just where I am right now. I'm just like, I need like letting several candlesticks form for me to be like, okay, well now it's reversing, it's going down, or it's ripping up, versus like trying to predict that and be
yeah, I think some of that just comes with time, because and sometimes you just have a bias and you're wrong, like it's okay.
Yeah.
Or it's like it's just the market, like in this today, it's like the market did do this crazy move and then punch back up and then punch back down. And when it starts to, so for me, for this trade, I would have liked a short because I think this big candlestick here could be like the start of a huge sell-off. Like it is crazy momentum, and with the volatility the market's had recently too. But the thing is, it's like I do want to see kind of I don't want to just get in short right below the candlestick, because that's often these candlesticks can just whip you out, kind of like it actually did. I'd want to see, essentially what I was looking for was, again, like looking at more the structure and where reasonable market trends and stuff would happen. Like here is like kind of this previous support. And so I'm thinking, okay, it broke that. I want to see it come up here, test it, and fail. Because to me, that's like showing you kind of that stair-step pattern down.
Yeah.
And it breaking, a structural, logical thing you can read and see. And so if it did that, I would have got in short below this.
Yeah. So you're looking for it to re-break that downwards momentum, essentially confirming it.
Yes.
Because right now it said, all right, we weren't sure about going up. We puked lower, and then you want to see it come up and be like, test that level, not go through it, essentially confirm that it doesn't have upward pressure, and then actually break through that low, and then you would get in.
Yeah. I mean, even here when it made, so it's like, here it broke up, but even here when it made this, like I was interested in getting in short here after this push down, but again, like I needed it to come up here, like do like a little 50% pullback of this big candlestick and then break the low.
I guess I'm thinking of it like right hand shoulder. You're looking for it to come up, show that it wants to go down, kind of pull back a little bit to confirm, and then actually push down through. Okay.
I mean, I think not always, but like in this case, because this is already after, it's like, okay, here's a big candlestick that failed, it's starting to kind of act weird. And kind of like you're saying, like, once it starts to do this over too long, like I think, the good entry would have been here after this big push lower, but because that didn't work out,
Yeah.
It's like, okay, now it's starting
And this is
to,
almost like 30-minute time frame.
yeah, like since it's starting to chop basically for like 30 minutes. And so it's like, it just gets to the point where it's like, and it's past, the kind of 10 o'clock reversal time. And it's already done like one swing in the day. It just starts to get to, I just get to the idea where I'm like, I'm not really interested. One thing too, I didn't really notice this. I don't really notice this very often, but it was exactly at 7,000. And so that's kind of a big psychological level that a lot of times can cause a little chop or resistance or support depending on where things are at.
Interesting. How often are you then paying attention or thinking about the like 11 a.m. potential point?
I pretty much never do it.
Okay.
Just because like again, that requires me to stay another hour versus just focusing on, okay, what's my read in the first 30 minutes, trading based on that.
Does something seem like it's setting up? Yeah.
Yeah, and then, I feel like it opens the door up for, well, you're trading longer, so you're more tired, so you're going to make a worse decision. And then also like, oh, if you missed a good trade in the morning, you might try and force something.
Yeah.
Which I've definitely
essentially
done.
like, oh, I've been putting a bunch of work in. I should be able to get a trade, or like I need to make a trade to make this time that I've just put in pay off, versus just seeing if something's happening. If it's not, move on. If it is, perfect.
Yeah, that's why I feel bad about it sometimes getting off that fast, especially if it's like I'm in my chat room or whatever. But it's like, that's what I'm doing. Like this is my strategy. I'm sticking to it. Like that's where I find the best trades for me and what works for me. And so it's yeah.
Yeah, it's interesting. I mean, this is kind of tangent from what we're talking about, but just like in the chat room, it seems like there's a bunch of people who trade similar stuff, but slightly different things, or at least put more trades in and have some like additional little, I don't know if they're indicators or what, but other things of bits of information they're paying attention to.
Yeah. I mean, everyone just kind of makes it their own, adds their own variation.
Yeah.
Like someone was talking about the other day of like, oh, well, what about, if you see this happen and you think that it's not going to go down, what about taking this as a buying opportunity to go higher? Like instead of, if the reversal, with the idea of, oh, if the reversal is going to fail, like why not take the continuation trade? Because, most likely you're at this inflection point where it's going to choose a direction.
Yeah. And if it didn't go down, why not choose up?
Yeah. And I think it can work, but, you can also have days like this where you just get chopped out either direction. And I think it opens the door for, you're adding on a second decision and even though it seems like it should be simple in theory and practice, I feel like instead of, for me, it's okay, it's coming up to here. It's showing signs that I don't want it short, so I'm just going to be done. Versus, okay, it's showing signs that it doesn't want to short. Now I have to think about all the signs to go long. And again, like I think it can just complicate things. And sometimes you can think, oh, well, I'm seeing signs to go long, so I'm not going to take the short. And then you actually miss the short.
Yeah.
And you're like, oh, I'm an idiot. I should have just sat, again, it's
it's
trying to just simplify things to like almost a dumbest amount of level of strategy. So then you can't mess it up as much with your mind being stupid and you trying to just complicate things.
You can't overcomplicate it.
Yeah, because that's
which
really
seems like it'd be so easy to do.
That's really like what messes people up as trading is they just overthink things when it's like the hardest part is just keeping it as simple as possible.
Yeah, it's been tempting to try and like figure out some of the acronyms and other things that people are using to trade in the chat room. I'm just like, nope, I will skip that. I have other things I'm trying to learn and do, so I will stick to Riley's method.
Yeah, because it's just the thought of like, oh, well, logically, if I learn something else, shouldn't that make me better or make my win rate better? And it's like, it just doesn't necessarily. It's the same thing with like, oh, well, trying to add on taking continuation trades. It's like, oh, well, shouldn't that make me more money? Because now I'm taking twice the amount of trades potentially. And it's like, no, not necessarily.
It was really interesting in my like one of my classes. The professor was like an old like professional trader, but he was going through. He's like, yeah, there's all these variables you can bring in to help track different components and everything like that to try and get a better guess. But like ultimately, it came down to like 3 variables that had the highest likelihood of like momentum was one of them. I was like, yeah, most of the time momentum wins. Like you can include everything else, but most of the time it's going to be momentum.
This was like the market was kind of here. I think it actually opened up here, but pretty much just sold off.
Yeah.
But the idea was it had a huge rip the day before, and just because the market was volatile, my thought was like, okay, well, we might just rip this back lower and give this move back up. This is on a 15-minute chart, and then going into a smaller chart, it opened up here and kind of just sold off. And so there wasn't a spot to get in short, which I would say was the better read or better, I guess, higher chance of a move, just with thinking about giving back,
grabbing it on the way down.
And so it kind of just kept selling off, sold past the 10 o'clock reversal time, and then kind of just started to sit here for a while.
Yeah, went into a little like sideways channel almost.
And so my thought process on this was, well, we did have a big sell-off. We could give this move back up that it's had. And so I think one mistake I did was I was trading way longer than I should have. Like once it kind of went into this chop, I think it's more likely that, usually these unhealthy trends, like the trade we were talking about this morning, is like they snap back quickly, right? And so, I mean, almost exactly like this morning on the flip side is it just started to kind of doing a volatile back and forth. But potential reversal spots I was looking at was my thinking was, okay, well, my target for the way down would be this. It essentially giving back this spike up it had. And so I would think that, okay, when it hits this, it might reverse. Or like here's some kind of gap that it filled. There's like this little gap here between when the market closed one day and opened. Sometimes those can be zones as well.
Yeah, I think that was over the weekend.
Yeah, I think you're right. And so, that's kind of what I was looking for. And then also, like you kind of mentioned earlier, the 11 o'clock reversal timing of thinking, okay, well, maybe this will reverse at kind of 11 o'clock and we'll start to get some movement up, especially since it's kind of has shown a slow in momentum here. And so I actually jumped in on a long right here because the whole time I was kind of watching this, I was thinking, okay, I want to see it make a higher high. Like it made a higher low here, but I didn't get long because I wanted to see it make, because in a spot like this, I'd want more confirmation because it's more likely it just keeps going down. Every time it makes a new high, it's lower and lower.
Yeah.
And so I think confirmation of it changing that is when it kind of breaks this. And so like it broke this, pulled back, and then actually kind of held this, which I thought was a good sign. Kind of what we were talking about earlier of like coming back to the previous swing and now
test to see if it wants to go low.
Yeah, now realizing, okay, that's support. So I actually bought in at the high, this candlestick. And then it, barely made a new high and then kind of reversed lower from there. And I think like this is a good read for like the trend potentially shifting. But big picture, like kind of in hindsight a little bit for me was my mistakes were staying too long. And then also I do have a pretty common rule that I follow is if it's trended down like that long and that like this is a huge sell-off actually from here to here, even though it fits on my screen, like this is pretty much 50 points, which in the ES is like a huge move. And so and like going off of here, right, like this is a huge move really fast, that has a lot of momentum, and there is the idea of like, oh, it is unhealthy. But the same idea with this move up being unhealthy the day before, like I didn't even think about trying to bet this to the short side with the idea that, okay, well, more likely these kind of moves.
It's just trucking up. Yeah.
Yeah, it's got so much momentum and it almost needs overnight to work
cool
off and then it'll flip. I think literally our last session we were talking about this.
Yeah, we were.
And I was like, oh, it probably is going to either reverse tomorrow or, maybe midday or the next day. Which is kind of funny now looking at it in hindsight, how it just ripped the next day. So it's like usually it takes something like that. And even here, it's like, okay, it sold off the whole day. It had a little bit of a bounce into the end of the day just because it got so overextended. But, then the major trend kind of came into play. And it did like kind of come back 50% of this move. Which is like a healthy pullback in the trend before it continues lower. Big picture.
Yeah. No, I think because at that same spot that you got in, I was looking and just had some notes down that were like, oh, this looks like a good spot. Like it's broken that little channel, so it's changing trends. And especially when like, I think my chart was probably zoomed in even a little bit more to cover essentially, I don't know, call it like 5:30. So what is that, 8:30 onwards? And so in this, it doesn't look like too crazy of a down or anything like that. It looks
Mm-hmm.
much more plausible that like, oh yeah, looks like a great spot for a reversal.
Yeah, and, I mean, it could have totally done like, it's like it totally could have, but I feel like it's like that's where it's the good lesson of getting too sucked into the smaller time frame and
Yeah.
reading to the 1 minute chart.
Yeah.
When if you just glance at the bigger picture, I mean, I think it was pretty much, if I try and make sure I get the pricing right on this, it was pretty much here. And it's like, that is, for me, like that's in the middle of the main range. Like there's no, like even though it's giving this move back up as a good target, that's a target for a trade you're in. I don't use that
Yeah.
as necessarily a level.
Yeah.
And so like, to me, there's just no reason to bet long there. In hindsight and really reading what the market's telling you, and so it's hard sometimes to, you make mistakes though, and that's part of trading. Like you get sucked in or you stay too long. That's why, that's why I don't like to stay long, is because I like a long period of time trading, because it's like makes me way more likely to just get sucked in and FOMO into something or just make a bad decision like that.
Yeah. Yeah. Something I think I wrote down either that day or the next was like, don't think in terms of I want it to blank. Think in terms of let's see if it does blank. So rather than being like, okay, I want it to give me another little bounce or another top. I want it to do this. Just be like, let's see if this happens. Because I think if the like I wanted to, I feel like I'm more likely trying to read it or make it happen. Being
Yeah.
like, oh, that looks like maybe that's my bounce, or maybe that's this, rather than just did it actually do that? You're just adding bias onto what's happening.
Another thing I think too is like trying to think of, like, for this example of like, okay, as it's coming down to this area, it's like, okay, it's still clearly in a move down. It's still making lower lows and lower highs, but we're near a zone. Like we're near,
Yeah.
in the sense of like, I know there's potential coming soon, like you're saying. And so instead of being
Yeah.
like, oh, I want it to do this, another thing I think about is like, to get in a trade, what would I want to see? It's
Yeah.
like, it's not like I want it to do this or I need it to do this. It's more of like, I'm only going to get in if it does blank kind of thing versus, yeah, I mean, trying to, essentially the main idea is trying to have it pre-planned out of what you want to see to execute your plan. And so you're waiting for the market to come to your already figured out idea versus, oh, I'm just kind of sitting here watching it all of a sudden, and then, oh, shoot, it did this big candlestick here. I better just jump in long and, bet that it's going to go higher.
Hope. Yeah.
Because that just, you don't want to be reactionary to the market, right?
No. How do you trade around when it seems like the market, obviously it's not hitting new lows, but when it's hitting like lows that it hasn't been at for a while?
I think we kind of talked about this last time, at least with highs.
Yeah.
Yeah, like here in this downtrend, like we broke this big level, and so it's like, okay, well, I don't really have a, even if I scroll back on a daily chart or something, like there's no support.
There's nothing for a long time. Yeah.
It's kind of just like, yeah, you just gotta wait. And
Yeah.
I mean, once it puts this in, like even here, I'll say, okay, I'll draw a level here and see when it comes down here. I'll look for it to react on this, because it's like, okay, well, maybe it double bottoms and I can get like a little trade right here.
Yeah.
But then otherwise, yeah, it's just kind of waiting, because
Yeah.
it doesn't happen very often, at least in the market conditions we're right now. But when it does, like it just, even with this, like if this was an uptrend into new all-time highs, and you would just be saying, okay, well, there's, this high that it's pulled back from. I'm going to see how it reacted there, and then it does this, right? If the market opened up here and then it moves along, and you say, okay, well, there's a new high I put in. I'm going to little double top and put it in a level there. And then as time goes on, I'd only draw this about after this kind of stuff here.
Yeah.
And then same thing of like, okay, well, it's got this, like this morning, right? It had this like little bracket. And so you go into the day with that now, but that's just how you, over time would update your levels and then, delete them. Or you could even say, well, this even matched with that high.
Looking back on it, I mean, yeah, we essentially talked about it on the high side. And also it's very back to what we were just talking about, of the like, I want it to. I want to trade in this rather than just let's wait for everything to happen and unfold in front of us.
Yeah.
Cool.
I guess there's this trade from last week too that I entered that we could briefly talk about.
Oh yeah. Yeah.
So this is when the market was pretty much right here. I think it opened up like this. And so like we were still kind of in a downtrend. And so the thought was like once it kind of got up to here, I think this is kind of where the short was. It did kind of break this, but my thought was like, okay, well, we've kind of come up to here. And maybe this is, you know, me not sometimes being a little aggressive about the levels I draw. But thinking, okay, well, had this moved down.
What do you mean by that?
I think maybe looking for levels in spots where it's not as clean, you know, like quick example is here for this one. It's like, okay, we had this sell off here and we've given up. That move kind of exactly like that last loss I did was like, okay, well, here's a target for this move, but it doesn't necessarily mean it's a good spot to short.
Yeah.
You know, like I was talking about over here as it came down here and like using this as a target, it's not necessarily a good shot. Like it's basically in the middle of this range.
Yeah.
Betting this. It's kind of same thing here of like, well, it's giving this move back up, but big picture, it's kind of like there's just some garble here or whatever. Like there's not clean swings versus like, you know, today, this morning, right? Like this is
It was
clean.
very clear.
This is very clear. Like even though it's a small range, like the levels
this has been the most clear that I've seen.
Yeah, like these were clean. And so that's where it's like, again, you know, I can always work on being more patient too, but if you can just be more patient and be like, oh, this is a spot, but I'm just not gonna, you know, it's just not a good level, I'm just gonna wait. You're probably gonna be more profitable. But again, it can be hard because like here, it's like there's so much movement and you're not taking trades and sometimes it gets the better of you, right?
Yeah.
But so that's where this zone was. I think, or I was like looking at this low here, thinking like, okay, well, it had this kind of bounce range. And so that's kind of what this level was here. And so the market broke out of that and came lower. And we're actually at a good timing. Like, you know, 9:30 market opens. It kind of just shot up, which was a nice spike. And then it just went into this kind of trend. And what made me like this was it had kind of a spike up here and such a big pullback.
Yeah.
Of good momentum and kind of breaking below this kind of chop it had. And so my thinking is, you know, it's kind of making that head and shoulders right here, where it makes a new low, pulls back. I kind of see how the market reacts to this pullback. And then I think this, if it goes down, you know, it opens the door to this.
Yeah, you're waiting for that candlestick to close below the green one, and then you would get in?
Yeah, I mean, I think
is the basic idea?
Yeah, I think I was just watching it, but like the idea was, I put in a stop order here, and then was gonna see how, because it's like, okay, I think this is a good enough attempt, especially this candlestick right here. Like as it's forming, I'm thinking, well, if it's gonna make a double bottom here, this is probably the candle because it's showing some strength right here and attempts to go higher. That's probably the candlestick that's gonna do it. But because that over this candlestick that essentially fails, you know, then it's like, okay, well, I think if it breaks this, that's great to the downside. And, you know, there's a little bit of...
Real quick, would you not want to wait for it to finish forming a candle that is like at the end of this candlestick, get in with a buy below it?
You can. I think sometimes without having like a real good rule for each, sometimes I'll wait and sometimes I won't. I think often, generally, it's I'll wait if it does like a big spike and I want to see how the market reacts to that. Or if it's like I'm a little doubtful, I want to see how, and I think the market's just going to fake lower and go higher. I'll see how it, you know, essentially breaks this new low. If it's just going to break it in reverse. And like you said, I put a stop or my entry kind of below this candlestick here. But like if it already has done like a pullback and I'm confident and kind of happy with where things are at, then I'll just kind of get in at the break of a new low. Because, you know, for me, like that's making a new low and that's kind of confirming that this is a lower high and the head and shoulders is in play.
Yeah.
You know, I thought it opened the door up to down here. I do think that my one thing was thinking, okay, well, there is, because this, you know, this is where the unhealthy move is. Before that, I think kind of here is a potential support level. And so
Just because it started being more calm there.
yeah, because it was like this was a healthy trend.
Yeah.
And so my thought is, okay, well, it's showing reversal signs up here. Maybe we'll get a healthy trend down. And if it breaks this, like you can see, I drew that level. If it breaks that, then I think we'll get the flush lower. So that's where like a little bit of a risk in entering this is compared to like if the head and shoulders happen right here and you're able to get in short as it breaks kind of this
Yeah.
those are the best trades because there's just nothing in the way and it will just crater super fast. Like those are when I get trades where it's like it's over in like 5 minutes or something and it's crazy.
Yeah.
Versus here it's like you kind of got to let it develop.
Yeah.
And so here it made this little pullback and I thought, okay, I'll move my stop down because it essentially made a swing low. And then here it's like, okay, I'm watching to see if it does a double bottom because it's
in which case you just slam it closed.
Yeah,
Or
yeah.
move it down even more.
Yeah, and I mean, like this looks super good right here. Like this attempt to go higher, big bearish candlestick, and
saying no.
It's literally like it's made a new low and it's basically breaking this support, but it actually ends up, I think, pretty much just here, and so here it's tricky because like I don't want to close out yet because like it did make a new low good. And like this was a nice swing. Sometimes it's like you just gotta let it do its thing. Like I've already taken some risk off and I'm happy with this level. Like it could totally spike here and sell off. And so I made the conscious decision to be like, okay, I'm happy with if I lose $900, I'm happy with that. I think it was okay moving my stop from down from there because at this point, if it does if it makes a new high, I would just want to get out. Like it's probably going to continue higher.
Big backup, yeah.
But there's so many times where like this if it's going to go down, like this high would hold. Like even if it pulls back here and then goes down, and so that's why when it's like here and it's starting to look. I even drew that little line and it's starting to like make a spike up like this. I don't close out a break even just with the idea that, it's like I think the trade is still valid and it could spike up and go lower. Like you just don't want to over manage. Yeah, you got to have, it's like I don't think you can take the risk off until like it's down in this area for this particular trade. But that's like something that'll just take time to get better at.
Yeah. We got to get to entering trades first.
Yeah.
Oh, that's really interesting though.
Yeah, I mean, I guess we could do entering stuff and get you kind of like spooled up on that.
Yeah, let's do some of that. I know I still need to watch, I don't know, the second part of your course that's more aimed at, I think, entries and some management.
Okay.
So I can at least watch some entries part of it. Because I think you go over it like quickly in the first part. And then you're like, I have more detailed videos later.
Yeah. Well, let me just send you my indicators.
My courses, all courses. Yeah, I don't have the indicators unlocked on your website.
Okay, so we're just going to do the 3 main ones. And for these indicators, anyone else that wants them, I'll leave a link for them in the description below. You want to go to install them now, you want to go to just your main control center and your NinjaTrader main control center.
Yep.
And then go to Tools, Import, and then NinjaScript add-on. And then that file you have that's like a zip file, you're going to want to find out wherever that is. Usually you want to save it somewhere. Don't save it for like PCs and stuff. Don't put it in like your OneDrive folder. Just because that messes things up. You want it locally stored on your computer. And then just double click and essentially open the zip file with the import option. I gave you kind of like a special packaged one, so I don't know if that's going to work or not. If it doesn't, we can do a different way. But let me know when it's like says import successful.
Successfully imported.
Just right click on the chart and go to indicators.
Yep.
And then do you see this at the top? There's like a little evolved traders file.
I do.
Okay, and then you should have the bar timer in there.
Yep.
Double click that. That'll add it to the chart.
Just apply?
Yep. Well, no, just
Oh, just okay, gotcha.
And then double click the click trader as well. And I think that's kind of the 2 you have there. Yeah, and then so you should have those 2. And then just the default settings is totally fine. You don't have to do anything with them. And then you can just click OK. And you should now have like this box on the right side and then this little countdown timer right next to your candlesticks.
Okay, I see the countdown timer. I don't see the box.
You don't have this?
We closed out of whatever the thing that says like buy, sell, everything like that.
Oh, so you just need to go up to here and turn the chart trader back on.
Okay, yeah, now I see.
Okay, how it works basically is if you hold shift, and I'm gonna switch to sim account so I don't actually enter in an order. You can click it like pretty much, and then left click on the chart. It'll put in an order, and then if you do control a buy order, and then if you do control, it'll do sell. Settings that might mess that up for you. I don't. If you see primary order here and secondary order.
Yeah.
Those you want to put as stop market as your primary order. And I like to do MIT, which means market if touched, as your secondary order.
So market if touched is if it hits that, it just trades.
Yeah, so essentially if you put a market if touched buy order below the price, if the market just comes down here and touches that, yeah, it'll put it in a market order basically that'll automatically buy at the best available price. So essentially the idea with that is, okay, well, if I'm putting this in and the market touches here, I want to get in because it's at a price I want. I don't care if it slips on me a tiny bit. And slippage is like if if the market's moving so quickly, it'll fill you at a price that you didn't necessarily enter in. Like this is the price of this order is at 6,960.75, and if it slipped, it would enter in at something else. Like let's say I'll just move this for simplicity's sake, but it like slips all the way up here to 61.50. Like that would be a worse entry for a buy order because originally you'd be trying to buy down here. But that very rarely happens. Generally when the market's like extremely volatile. And actually, if you go to indicators again, I would say you do want to try and if you click on the click trader, once you've changed that market if touched button, also you can actually change the hotkeys on here. If you don't want your sell, like the hotkey to trigger a sell order, you can change it from control. Or if you don't want the buy order to be shift, you can change those to other items or other hotkeys. But for me, shift and control just I find works. And then of course at the bottom, like just click on the template button to save as your default. So it always has those.
Is it then set up as on bar close?
Yeah, so that just allows you to, again, like when, like in these trades, like when I say, okay, well, I see this candlestick here, right? And my signal is that I want to buy above this candlestick. I'll just hold left shift and put a buy order right there so that if it does, and as soon as it does reverse, it'll get in an order exactly at that point. So I generally just get in on stop orders.
Okay, so shift and just click.
Shift and then left click, yeah, with your mouse.
It's not doing it.
Do you have you need okay, you don't have an ATM. This I'm assuming says none.
Oh yeah. Okay.
Sorry. You need to go and I think your option will either be do this drop down menu and click custom, and it should bring this up.
Okay.
So you don't need the order quantity you don't have to mess with that. Change the parameters to ticks, and then your stop loss and profit target. I just do this to like if I'm trading the ES generally, I'll just say, okay, I want my profit target to be, let's say, I'll just put it in, it doesn't have points. Okay. Yeah, you can do this like 60 here for a profit target and like 30 for a stop loss. And then just click OK. Actually, no, you want to save the template. I'll just save it as test. And you don't really need to change anything else.
Okay, yeah, it should work now.
Okay. And then you can just click, so if it's here, you can just click buy market actually to test it. And then you can see it'll pretty much automatically put these orders for you. And that's what the stop loss and profit is. You're essentially, that number we put in there is saying, okay, this is going to be 30 ticks away from your entry. I think the stop was 30 ticks away, and then this is going to be 60 ticks away.
Okay, so that's setting your essentially 1 to 2.
Yeah.
And then your risk loss calculator does all that for you, right?
Yeah, we'll get into that in a second.
Yeah.
And so, so I always try and have these just far away because the idea is like, okay, yeah, we'll talk about this in a second. It's like I have the risk calculator I'll always have drawn, and then I'll just say, okay, it's here. Essentially, like, especially with these, it's like I want them far away from the actual price in a safe way because then, it doesn't take long, but, a couple seconds to be like, okay, here's actually where I want my stop, and then here's actually where I want my target.
Oh, got it. Okay.
I'll essentially move those, yeah. And then so just to kind of close this out. And then, yeah, the next thing is the risk reward calculator, because this will automatically update how your order quantity needs to do based on your target amount. So first thing is, well, just to see if it imported, if you go to drawing tools here, right click in drawing tools, Do you see it right here at the bottom?
Yeah, I do.
Okay, so that will essentially pull it up. And I think first thing is actually if you go back to your control center, we want to go to tools and hotkeys, just so then you can put, because I don't think when we originally set up hotkeys, this was available.
No.
So if you scroll all the way down to bottom, it should be there now.
Perfect.
Okay. And then from there, do you have this drawn up now? Risk reward tool?
Yep.
Okay. And then double click on it to bring up properties. And then a couple things I believe that the default doesn't have on it is you can set your risk here. So, you know, when you're starting out demo trading, I would always try and just do like, let me see if I go to the MES right now, which is what you'd be trading. And let's say like you try and risk $50 a trade. Like I think that's a great starting point. So like $50 a trade definitely gives you some wiggle room. Trade it if you're trading small enough. Like if you were only trying to risk $20 a trade, sometimes you would be, you know, one contract would be too big. Like here, if I was gonna enter in like this morning, you know, when we were talking about this, like if this sold off here and I got in below this, like, and you're trying to only risk $20, like it would be too much. But like with $50, like you're much better. There's more flexibility. Same thing with like this long down here. You know, it's gonna be sometimes it's gonna be harder to get the right target amount of risk, but that's just kind of how it goes. Especially when you're kind of just starting out with sizing and you don't have the flexibility of contracts. So yeah, set your risk currency to $50 here. And then I usually have, you want strict risk clicked off. And then I usually have unrestricted risk at like 10 or 15%. And what that does is it allows your risk to go over whatever you set. So like you're set at $50 and this is saying you can go 15% over that. You know, with $50, that's not a crazy amount. It's literally $6.50 or whatever this is allowing you to do. Once it goes over that, it'll say, you know, 0 contracts. And then it will be like, okay, you're over your risk amount. You could always set that to be a little more if you're like, hey, like I want to get in a trade if it's, especially when you're trading crazy small risks like this. If you're like, okay, well, I want to take a trade if it's like, I'm fine taking a trade if it's like $60 or $75 risk. Then you can up this. But like once you get larger size, I would definitely reduce that down because you don't need to be going crazy over your risk amount.
This is a dumb question. It doesn't want to let me move it around very well.
When you click on it, I have to click on this line to select it, and then it should have these little circles.
Okay, there we
Pop
go.
up.
That's working better. Yeah, I see the circles.
Yeah, you can't really select the colored lines. You have to click on the gray line.
Okay.
I don't remember if this is the default color settings either, but you
Yeah,
can
it is.
change them down here. Okay.
What does moving the circles around do?
I mean, it basically just moves where the anchor is. Like it's just kind of like it has kind of like a default size, but it just helps like visualize
it. Okay.
like where you want. And then obviously like vertically changes how it works. The last big thing is you want this auto set quality is always off by default. You need to click that on, and then that should be the last setting. If you want to increase how many profit targets you have, pretty much you just have to do the same grammar that it has set up here in this little ratios box. You can literally just copy paste and add a 4.
Okay.
And I think if anyone's on the European or just non-American, it's slightly different how it's set in there. But you know, that adds you another target if you want to see that. And then of course, actually in there's also, you can change this to not have essentially price or a dollar amount of the risk. You can just change it to price or something, but usually risk reward, the default setting works for me. And then that auto set quantity makes it so this automatically updates like you were saying. So like if I, you know, one contract, it changes this. So like if you then make it smaller, this automatically updates to 3, right? So
got it. Okay.
It's super easy to say, okay, well, I'm going to put my stop loss here and my target here. And if I'm trying to target roughly $50 of risk on this trade, based on that size of a stop loss, how many contracts do I trade? Because when the market moves, you know, and where that is, like that changes. Like here, from here to here is $50. And you don't want to just be trading 2 contracts every time, because down here it actually takes 3 contracts to do that same risk, right? So that's like the huge thing about it that makes it so easy to just use this and say, okay, well, my risk is here. You know, it's $50. I'm gonna just put my order right here and with my shift click hotkey, and so it makes entering in like super fast. So these are like insanely big quality of life upgrades, I would say. And then, you know, with the hotkey and the default, you know, here's mine defaulted to my normal size. Then you switch over to the, because we're on the micro, you know, ES right now, you would switch over to the normal size.
Be what, 4.5 or something?
Yeah, it just default to, because you can't trade half a contract, it just default to 4 contracts.
Yeah.
I mean, any other entry questions? That should be pretty much the main setup.
I don't think so. I think that's the nuts and bolts. It seems like it's just getting better and understanding exactly what I'm looking for.
Yeah.
In terms of reversal patterns, because I mean, like so far, most of what we've been looking at and what I've been looking at is the like larger sets of candlesticks and what they're all saying together. And this is much more, what does this specific candlestick say, and how are these 3 candlesticks interacting together?
Yeah, and one thing I actually to bring back up about the drawing tool is visually what it does very easily to mess with your mind is, you know, like let's say for here, right, the signal to jump in on this trade was here and the stop would be here because that's where the swing was. And so for this trade, you know, I would draw my tool right here because this is, you know, 1 tick below here, and then I'd enter here, right? And so, you know, it's targeting my risk. I would, you know, put my order in here and I'd wait to get in.
Okay, so you're putting it one, the bottom is 1 tick lower.
Yeah, technically I like to do it 1 tick below because I like, then that's officially broken that low. Same thing with this high, it's officially broken that high when it's 1 tick above.
Okay.
But so the thing that can mess with your mind is, you know, it's like, okay, well, I'm gonna get in on a stop order here. But if I enter in down here, if I just enter in on a buy order, you know, on a pullback, that allows me to, you know, you would adjust this down and you can start to say, well, I would hit 3x right here. I can get, you know, 10 more contracts, you know, like just the ratio, like your risk reward ratio, you know, from entering in here, you would be up 2x when it's that price versus if you entered in here, you'd be up 3x. And so it's very easy to like not get in, or instead of putting in that stop order, you put in, you know, a buy limit order down here and wait for the market to come back and fill you if it does. And, you know, you run the risk of it not coming back and filling you and just shooting up. Or, I mean, if this case it broke up and then you'd wait for a pullback, but sometimes if you just wait for it to pull back versus not, you know, you want to get in essentially when the signal happens, bottom line. I'm sure there's ways to maximize things in more ways, but like at the end of the day, it's better to just get in with the signal. And, you know, your maximizing is going to be sizing down the road. Because, like, at the end of the day, the goal is to just capture some of this move. And even though at your current size, it's like, well, I would be, you know, up X amount here versus if I entered it here, I would be up way less. You know, I'd be up 2X instead of 3X. And it's like, well, you're still up money and you're getting in, you're not trying to, like, I just had times in the past where I'll try and play with that. And it just, again, it just adds another layer of just where you make mistakes and mess things up. And then if you miss it and you don't get in or whatever, like it just messes with your mind and your ability to just do clean executions.
Yeah, that makes sense.
I think that's all I have on entries, unless you have any other questions.
I don't think so, especially not for nuts and bolts. I mean, the main thing is just trying to figure out exactly what I'm looking for in terms of patterns, or trying to understand the couple candlesticks that go together. And some of that might be...
I mean, I think that a lot of that really comes up when it's like you start actually trading and it's like, you know, it's like you actually have to make that decision of like, oh, I'm going to enter in here. And even, you know, even when it's like demo trading, it's like you're still making that decision versus just kind of watching the candlesticks print.
Yeah.
Yeah, I mean, I guess last week was pretty exciting with having that big trade go on and you kind of practicing with...
Yeah, my first fake real trade.
Real
fake trade.
Getting used to like what that might look like and actually pulling the trigger on some of that stuff.
Yeah. I feel like I wasn't great about going and doing my homework from last week. I did spend some time flipping through some of your like videos in the course, which I felt were honestly like it's super helpful to go back and revisit those videos because the first time I watched them through is very much a like just trying to get an understanding of the strategy and a little bit of what's happening so that when I start looking at the charts, I have some idea of what I'm doing. But re-watching them was super useful because it's like, okay, now I have more understanding of what I'm doing and more understanding now of what Riley's saying in his videos and coursework.
That makes sense. Like you can connect the dots a little bit better.
Yeah. So if
Okay.
anybody is also going through this, highly recommend re-watching some videos.
Helps a lot. Okay.
Yeah.
Yeah, so I mean, I guess we can, if you want to walk, we can walk through that kind of trade, and then like you can kind of see what you were thinking when you saw it, and we kind of just
Yeah.
talk about stuff like that. And I'm sure there's some other questions and spots we can talk about.
Yeah, 212, I had a question of like, was there an entry that day? Was there a spot where you could trade? Okay, so from my perspective, I guess starting out more big picture, the market had kind of come up and gotten itself into this little channel that we're seeing there.
Yeah.
And so it just kind of been dinking back and forth in the channel.
Mm-hmm.
And so I think we start off the day.
It starts the day off at the high of the channel.
Yeah, it starts off the day at the high, and like in pre-morning trading, it had done that giant like candle and push up, which looks very unhealthy. So it kind of comes up, touches it initially,
Yeah, like right at the open.
yeah, right at the open. And looking at it, so this was, I guess, kind of one of the first, most of the time when I've been looking at it, I've just started with like, okay, properly start looking at what's happening once the market opens. And this was one of the first days where I'd properly kind of looked at, okay, it's already made some moves or made part of the like come up, test the level, sell off a little bit, retest, yeah. Um, and then give that back up. And so it did some of that before market open.
Yeah.
And so I had a little bit of a trend line drawn from, I don't know, the 845 mark through, yeah, through there. And so when it came down, broke that, I was like, okay, step one, be at a resistance zone. Step two, break the trend line and break it in a manner that's meaningful. And then watched it for a little bit, and it just kind of kept going down in those consolidation, did that kind of spike up and immediate rejection, which I thought was pretty strong for not wanting to continue higher. I also think the way I had my support zone drawn was slightly higher, and so the tip of that candle really touched the bottom of my support level.
Like this, your resistance level?
Yeah, or I'm sorry, resistance level. Yeah. And so it kind of, to me, touched it again, was like, nope, not feeling that. Continues lower for a little bit, has that bar, has a couple more, and then I had it's kind of forms a little bit of a trend line there with one or two more. Maybe I drew that afterwards. But I just had a note in there just being like, needs to see how it reacts to a low here, and then obviously decides to keep pushing. And so my thought was, okay, here it is, it's formed, it's like it had its first shoulder at 9 a.m. before open. At 9:30, it's had its head, and then it's set a lower low and a lower high as well. And so it's really formed that nice like head and shoulders. And so then when it then has a little bit of a nicer candlestick, actually it's not even that nice of a candlestick, but push down below that low
Yeah.
of the shoulder, it seemed like it was going to start going, especially as, okay, it's been unhealthy moving up. It's kind of touched the support zone. It's done its whole nice head and shoulders thing. And then I essentially decided to enter somewhere around there with my risk reward. I probably didn't, I don't think I necessarily put my exit zone in the right spot. But yeah, I got in there and then just watched it kind of go down. And I just had a note of like, it seems kind of sloppy how it's all set up. But all the basic principles are there. What we talked about the day before was there. And then I kind of just sat in it and watched it go down for
Yeah, and just kind
a
of
long
rip
time.
lower. Nice. I mean, it's it's still a whole like main principles, basically spotted in the top
Yeah.
and waiting for those confirmations, and then like actually entering in trades and stuff. Like you'll get more practice with that actually, because like you didn't actually enter in an order, right?
No, I just,
You
yeah.
just kind of like went like this
Mine's
with
being a
like
little
your
funky with that.
risk
Yeah, so I
reward.
just did my risk reward and then just left it there and didn't touch
Yeah,
it.
mentally was
And I
kind of like,
slowly wrote in notes of like, okay, I moved my stop break to here and then moved
mm-hmm.
it here and
Yeah.
then had it theoretically get stopped off at
Yeah, I wouldn't
some
like
point.
slow down. Nice. So yeah, and I guess the next thing would be like, would you be able to enter in orders this next coming week? Because that'll definitely be helpful to start doing that too.
Yeah, I think I should be able to.
I guess the interesting thing about this setup that was a little different was like it wasn't, the market opens and then did a big sell off and then you look for like, 30 minutes after and for it to reverse.
Yeah.
Versus like it kind of did that, like you were saying, before the market, and then it just kind of opened and it was like, so there wasn't really that timing of like, oh, looking for a reversal at like 15 minutes or 30 minutes after the open. It was more of just like the unhealthy moves already happened and I'm just watching the structure break down, and it looks like that's going to cause the market to move this direction this morning.
Yeah.
And I think, yeah, the other tricky thing about this trade was this like chop, like getting in on that was abnormal or funky, But again, it was just like just looking at the main picture and, just being like, oh, I think that big picture is going to play out essentially.
Yeah. It was definitely it seems sloppy and weird and not necessarily super clean, but it's like still sticking to, as you were saying, the big principles of like, all right, it's at your ceiling or resistance zone, has broken a trend, it's done its like head and shoulders thing.
Yeah.
And then it's gone through and broken the low of your head and shoulders.
Yeah, and then that was a nice signal to get in. I also think when I was looking at this, because that gave me a little doubt with this trade of like, oh, it is kind of acting a little choppy. But when I was looking at a 5-minute, like this is pretty much, I think, where it was when I got in. And on a 5-minute, like this looks amazing to me. And just to try and articulate why it looks amazing is because there's, this I would say is the big unhealthy move right here, this candlestick. And so when I see it, it's like, okay, once it breaks, like this is kind of a minor support. And once it breaks this, I think it's going to move down really quickly to at least to here. And then, maybe it slowly moves down to the rest of the way, or it just shoots down as well because the momentum's just crazy. That like gap there, I think, is like what's really strong for these trades is when there is no, there's no candlesticks like that could support it. Like here, it's like there's back and forth in these candlesticks, and that's why it was kind of slow to get going when it moved down. And it's like these like swings are really clear to see on a 5-minute as well. And so that gave me a ton of confidence, and like the structure of it looks so good.
Yeah, that's something I didn't do, was flip over to look at the 5-minute chart. That I think would have been really useful just for having it be like that. All right, it drowns out a lot of the noise.
Yeah.
And lets it appear much more obvious.
Yeah, because I think it's super obvious here. But then, if you look at this, you're like, oh, well, what about like these 20 candles here who are just super choppy versus being like, oh, that's nothing right here. That's just a little move and it's clearly going to get going lower.
One of my questions, I think, from that day was any reason why not to enter. So obviously most of the time when you see one of these and you take it on either the ES or NQ, why not enter on both? Just because it's essentially doubling down, or just gives you more to manage and think about?
You're just doubling down, I would say. Like, they're so correlated. Like, if we pull up both of these, like, they look basically the same. And so it's like, you're just doubling down. Like, it's either going to work out or it's not. So it's like, why not just double down on one? And, it's like, and some of them do move better. Like, if you, like, really look at, okay, the NASDAQ, I think, let's see, if I try and look at the exact candlestick I entered in on, I think I entered in pretty much here on this candlestick at 54. And so, I put my entry there, my stop there. And if we go to 54, that's this candlestick, and I would have put my stop up here. We look at this and try to, then I just pulled the chart to see where it actually went. Like this got down to, I pretty much got out here at 3x. And then same thing, if we look at it here, it would have been actually pretty much the same thing, 3x. So it's like now there's a little contract issue. Like NASDAQ is actually larger of an asset. So to try and get, my target is $1,500 of risk. And so one contract was $1,200. So I couldn't trade two because that would have been $2,400 versus the ES. I did 3 contracts at $1,650 risk, which I'm fine. I'm fine doing that a little extra risk to get a little more closer to that 1,500. And so on the ES, actually, I would have made more money. And so that's something I've actually realized why I like to trade ES over the NASDAQ is because generally you can trade more contracts, which for the size, depending on what size you're at, generally it's a little more flexible for either,
Could you just do the micros instead?
Yeah, I could. But the problem is then I would be trading on the NASDAQ, it'd probably be like 15 micros. It's like that, the fees when it comes to trading that, it starts to get a lot. Like I was trading like 15 micros for a while because of that adjustment. But once you kind of get into this territory, like you don't want to be trading 20 or 30. Like it's just not worth it.
Yeah. Starts racking up fees.
Yeah, and you want to, they're not crazy big, and especially if you're like not trading often and like your accuracy is good, but it adds up.
I could probably Google this as well, but what's the difference in value of ticks between the ES and NASDAQ?
The NASDAQ is $5 a tick, and the ES is $12.50. Okay. So that's why it's like there's that discrepancy.
Yeah, there's a discrepancy in number of.
Yeah, well, because like the Nasdaq is moving 100 to actually this move was like 300 points versus the ES was 80, 70. So, but like at the end of the day, the correlation, like just trade one. The Nasdaq people would say is more volatile, but from my experience, whenever they're moving the same, which is when I want to trade, like I like them to be moving the same. If they're not sticking together, which is I think one of the days actually we'll talk about when they're diverging and different, like they're just not worth trading. So even though people say the NASDAQ is more volatile, for this strategy, I find it to be the difference doesn't make it any difference.
Yeah, and I guess another question I had was a little bit of like, do you ever find there's much of a lag between them? I mean, even if it's just like a couple candles in their movements. So if the ES is leading the trend and then the NQ is following, is there anything you can take advantage of in that? Of essentially like, okay, well I can further guess that it's going to go down here, or is that kind of just like, I guess in some ways you're just trying to
I would
fancy
say
and optimize.
That's what sometimes what I think. Yeah, you could almost just not look at the NASDAQ, or just don't. I like to look at them in the sense of like I want them to be trending the same way. Again, that I want that alignment. But in terms of like you're trying to see like, oh, if one's leading, like an easy example that I've tried to do is like, oh, well, if the ES is acting more bearish, like technically this made a new low when the NASDAQ at this point hadn't. It was actually it didn't make a new low yet. It was just actually more in this choppy range. And so in that sense, the thought is like, oh, well, I should get in on the ES here because it's acting more bearish, so it's more likely to sell off more. Or vice versa, if the NASDAQ's acting stronger and I want to get in a long, I should get in the long on the NASDAQ. I would say I have never found that to work out well. Same thing with like trying to be like, oh, well, the ES made a new low, but the NASDAQ hadn't, but I like the NASDAQ, so I should use that as a signal to confirm my short on the NASDAQ. I don't think that's the case. What I will do sometimes, though, is if I like a trade on, like, let's say I like a short on the ES here, but the NASDAQ is just still trending higher. Often in that sense, I will say, well, I want to wait for the NASDAQ to start showing that it's making a trend down as well, in the sense of you want them to be both aligned. Like you want them to be both putting a short signal out to bet lower. Because otherwise what can happen in cases is the NASDAQ could be super strong and just drag the ES up. Like even if the ES is down here and you think it's going to go lower, it could just get slowly dragged up and the NASDAQ is just like rocketing throughout the day just because, for some reason tech is doing really well that day. Tech is huge amount in the S&P 500 and so it's just going to drag the market up. And so That's about the only amount that I use. Is just I want them to both be correlated.
Okay.
Don't yeah. I've
Don't love
tried to
tricky
like
things.
I've tried to do that, and it just I think it just overcomplicates thing, and just sometimes it'll work, and then other times it's like you'll get in short on one thinking that it's the more bearish one, and then it won't go down very far, and the one you were gonna get in on just like puked, and you're like, well, I could have been up way more money if I just followed my like read on the right market.
Yeah. Seems like something to file away into the potential factor that you could add in that really is too complicated and has a minor effect.
Yeah, I just think it's
Or is
like,
just gonna have like confirmation bias associated with it.
yeah, it's just again, I think it's just one of those things that's tricking yourself and to thinking you can figure the market out.
Yeah. Rather than just sticking to the like big principles and things that matter more.
Yeah. I I guess a thing too to think about this trade was it's a little bit that I don't do all the time. Is to kind of walk through this recording of the entry is usually like I would jump in when it makes this big candlestick and makes a new low here. Like a lot of times, a lot of the trades I'll have this stop order to get in just sitting there. And then when this candle broke that, I'd be in the trade. And the reason why I did that on this one was because it was so choppy, because I didn't want to get like you want to get in on momentum, but in the market where it's like there's so little momentum, it makes it more likely that it does this the next candlestick. That this is just a unhealthy move over one candlestick, and so it's going to pull back. And so there's no point in baiting into the market.
Yeah.
And then this is also a good spot to where if the market was going to fake lower and actually go higher, I think it would have done it after that candle and fake lower. Because it's barely making a new low, and then it would have been like, okay, we've baited people short, and now the market's going to go up. But if that continues lower and keeps going lower, then I think it's like, okay, well, it's just a slow bleed of the big pictures working out, and it's just this chop has to figure itself out. And so then I put my stop below this low that it made.
Yeah, I think my entry was a tick or two lower is where I put it.
Yeah, but that was basically the reason why I did that versus I think some of the other trades. It's Was there any other questions about this trade, like the management, or I mean, even like where my stop was? Like my stop was a lot of times I say put your stop up here above the high versus here.
Yeah, I wasn't really thinking about my stop, but yeah, where are you trying to place your stops?
Generally, I like to do it above this swing, with the idea like, okay, we're just making lower lows. It could come up here and make another lower low, and so the trade's only invalid when it breaks this right here. In this case, I'm skirting the rules a little bit by putting it here, but my thinking was, I think this is going to get going, and it's made this kind of move here that is almost like a little minor lower high from this. And so just my reading on the market was that, I think if it's going to get going here, it's going to get going. And also in the, I guess we talked about this a little last week of trying not to do this too much, but if I put my stop all the way up here, I'm going to have to take 2 contracts, and it's just going to make my risk reward crappier.
Yeah, you're giving yourself lots of room to play, but yeah, it's so high.
Yeah, and my kind of thought was like, okay, well, we might even be in this kind of downtrend right here. So, but it did definitely leave room up for it could have come up here, knocked me out, and then gone lower. So, in the probability sense, that's a risk that I added on. But my kind of read was that it was kind of going to start working out.
Then can you talk about how are you managing and how you moved your...
The initial target, is going to be this, right? This news open, because it's like, okay, that's where the easy money is. That's where this unhealthy trend started. If the trend's going to just like recover and become healthy again, that's the initial target. So that's what, kind of this support zone right here is. So that's kind of like, I'm thinking, okay, well, at least I want to see how it reacts to that. Now, one thing, I did move my stop down here. Once it made this big spike lower, and I saw it kind of like it spiked lower here and pulled back really fast. And so my thinking was, okay, well, I can at least probably move my stop down to here where this kind of move started. Because if it comes down here all the way and shoots all the way back up here, I think it's so unlikely that it then just reverses again. Like at that point, it's probably filled this kind of gap that we're looking to fill. Like it's gone most of that. And so the risk is, okay, the market comes down here and just like, starts trending upwards, right? And it's had its pullback that it needed. And I'm looking for a deeper pullback and something that's more than just a pullback. But I didn't want to go to break even yet because I think it totally could have come up here, essentially retested this support zone.
Yeah.
Like it could have come up somewhere here, even broken a little higher and then gone lower. And so that's why I didn't want to move to break even yet, because that my stop would have been too close to that zone. And it would have like retested the bottoms of these candlesticks, you could say too. So like that's why I didn't do that yet. But when it essentially made a double bottom here and retested this low, then I moved it, because it's like, okay, if it comes down here, does a double bottom and comes up, just get me out. There's no point in risking any money on a trade at that point. And it's still plenty of a pullback to give it for if it's gonna have some kind of pullback and then continue to go lower.
So you're viewing that as a double bottom, even though it's all of two candles, or the candle was still forming.
Yeah, well, yeah, I'm not necessarily viewing it as though, well, the thought is like, if it does bottom here and, it bottom, like this candlestick goes green and this candlestick starts pushing up, it's getting into like the smaller picture for managing it. Like as I'm managing, I'm looking more at that stuff, and it's tricky because it's like, you don't want to over manage it, but why I did that was because we had such a big move down here. And so like you can see that double bottom like kind of starting, and it almost gives this back up. And really like there could have been a world where it did come up here and then kept going lower just to retest this. So like in hindsight, maybe I moved my stop lower a little too early. But my thought is because it double bottomed here, that felt a little spookier versus this initial candlestick here had a pullback already to make it more of a healthy move. But then it broke lower. And so when it makes a new low like this and breaks this low here, that's my signal to move my stop down below this low, because it's essentially confirming this swing here is a lower high when it breaks this low right here.
Okay.
And so that's how when it gets to it, how I like to stair step pattern, my stops down if it's doing that. And so as soon as it makes like a new low right here, I'll move my stop down. Makes a new low here, I'll move my stop down to here.
Okay. And
so that's how I try and methodically do it, is like, even though right here it's at that minor support, right? It's looking at a 5 minute, this is a 1 minute, but it's got down to this spot, right? Where I think the trade could reverse. And so I'm not moving my stop down yet, because like, at this point I'm only up 1x, and I think there's a lot of more room to go if it keeps going. And also there's kind of this downtrend in play. It's more of like a mental trailing stop of like, okay, I'm going to see how it reacts to here. And then maybe I'll move my stop down a little bit to like just get out and get some money. But like, it's just, I'm just going to leave it because it's, I just want to see how it develops. I'm expecting some kind of pullback. And even here you can say, well, it's made this low, makes a new low. It essentially comes up here, tests that low, and then starts making a new low as well. So like, that's how it's like, you want to just have these areas in mind. And that's why it's like, they're micro areas where I'm not going to take a trade off of, but like, as I'm managing it, I'm watching how the market's reacting to them.
Yeah.
And then you can see I moved my stop down here again below this little micro swing we had as we kind of got going again. And so, then it kind of started to, I think not yet. Like at this point, I'm still just like, okay, I'm just using this trend line. But then when it, I think, prints this next candlestick, I essentially switch. Yeah, I switched to like, okay, I got to be more aggressive. Like this is starting to go unhealthy in the downside direction. And so there's this big bearish candlestick here. And so I put my stop above there. Because like a lot of times, these big candlesticks, the market won't break the high of them unless it's going to reverse. Like even this one right here, like this is a big bear candlestick where a big move happened. And so you can put your stop above this. And, it's like there's a swing right here, but like this is a great candle as an example. And then this is a good candle as an example. And then here, it does the same thing of another big candlestick. And so as it closes, I actually moved it a little bit before. And the reason why I did that is because it broke the previous candle's low, and it was a big candlestick right here already. So like my thought is like, okay, if it ends up like coming back in the candle, I'll just get out because we're getting down to the major support zone.
Yeah.
If I just pull it up from where that is, that's like, oh no, 1 minute still. That's these. I'll just do a 5 minutes, way simpler. Like here, it's basically these two major swings from the overnight, right? And so as we kind of come down to there, I'm gonna think, okay, we could totally reverse, right? Same thing, like treating this as a spot where I'm not gonna take a trade and bet long after this, but like I'm gonna assume that this momentum that it's going in is gonna dry up because it's so fast. And then it's kind of just like repeating that of like, okay, it just, and even this candlestick, I moved it down to the high, but because it was such a big candlestick and it's kind of just down here still, that I'm okay moving it down to the high of that, if that makes sense. And then, because like the candlestick starts to just kind of get kind of huge. Same thing with this one, is it just kind of broke a new low and it kind of got going. So I moved the stop down again. And then eventually it just kind of, one of the candles prints green. And especially at this point that's why it's like I switched from doing this using the trend line, because if I have to wait for it to come all the way up to the trend line,
that's a lot of space. Yeah.
You're giving this whole move back up. Yeah. And it's like,
Yeah.
I would lose like $3,000, I think. Like at the most I was up over like 6K on this trade, and definitely if I just reverse, like to move all the way back up to here, if that's where I was waiting for, it's like I would have only gained like 3K.
Yeah.
So that's why you gotta like cut to like a trailing stop. And it's like you do leave money potentially on the table. I think if we look at this in hindsight of what it ended up doing, is like it had that one candlestick and then it kept going for a little while. It eventually bottom, but like, there's definitely money left on the table. But, if you think about a big picture, right, the strategy is you're not trying to capture the exact high to the exact low. Like that's just impossible.
Yeah.
For this trade, it's like, okay, I didn't capture, I got out here. I didn't capture this part of the move, and I got in, right here. So I'm literally capturing like 1/3 of the move. Like that's pretty much all I caught, like from entry to exit.
Yeah.
But it's like, that's the easy money. Like it's way easier to wait for this confirmation than trying to aggressively get in up here, because so often you'll be wrong, versus just waiting for this really super clear confirmation and then getting out when it shows any token of resistance, because a lot of time this could easily turn into where the thing just rips up,
Yeah.
And a lot of the times, honestly, looking back at my trades, this will be the bottom right here, and there won't be this extra, and so it'll look a lot better to where it's like, oh, instead of capturing 1/3 like this, it's like the trade's more like this, and I'm capturing from here to here, and so it's like I'm capturing 50% of the movement. It's like it's always going to be slightly different, but it's like you don't be focused on trying to capture everything, because it's going to make it to where you have to be too loose or too aggressive in certain spots where it's just not going to work out.
Yeah. I think in some ways I got because I ended up getting out essentially right after it forms that first big white one going up. That's what knocked me out.
This one or this
No,
one?
no, all the way down.
Oh, okay. Like this one?
Two or three to the left. Yeah, that first one. That one, yeah.
Oh, okay.
And I think some of it was just like, I obviously don't know what constitutes necessarily a big move. And like, I guess a lot of what we've been watching, or I've been watching, is where it's seems like it's doing really big moves and very volatile. And so I was like, okay, it's done its first those first two spots where it kind of like stair steps up and then keeps going, and stair steps up and keeps going around 10 a.m. And so then when it did that next one at 10:15, I was like, okay, it stair steps up and then keeps going a little bit, and then I moved my stop down, I think, just above there. So it was way less active management.
Mm-hmm.
And then I think when I got towards the bottom, I was like, okay, it's getting close to a really big resistance level, and it's losing a lot of momentum. I'll put a stop down there.
Yeah, I mean, that makes sense.
I think part of that's just like, in some ways, got lucky and was way less actively managing it.
Yeah.
So.
Well, I mean, like when you don't actually have a trade on, it's a lot.
Yeah. Way easier to just kind of sit and let it do its thing,
like,
rather
I'll
than
be fine.
Yeah.
Versus seeing that one candlestick pullback be $1,000.
Yeah.
Yeah. I mean,
But it was also interesting. I guess one of the things thinking about that candlestick as well, is like it doesn't seem,
This one?
yeah, it doesn't seem especially out of the ordinary when you're looking at the size of the other candles. And so I guess in part of my thought was like, and obviously I wasn't really looking at dollars and saying, oh, this is $1,000 move or
Yeah, yeah.
whatever. But it was just like, okay, it's roughly the size of some of the other candles that the market's been moving. So it doesn't seem like relatively too high or relatively too big of a signal.
Yeah, I don't think it was necessarily, it's like, oh, this is a big signal. I think it's just more of the way I'm doing it is I'm just saying, hey, it's just printed so many bearish candlesticks in a row.
Yeah.
If we're getting a spot where it could bottom and just print
Yeah.
all those candles
Opposite
in the other
direction.
direction. Yeah, I mean, like, even just thinking about what Friday, that we haven't talked about yet, but that day where it's super choppy, like here, just so many bearish candlesticks, and obviously it's not trending, but like out of nowhere, it just kind of did that, and then all of a sudden the next candlesticks are boom, it's just the other way.
Yeah.
And so you just
Yeah.
you're just risking, and like you could have a rule, and I've done this before. I don't think it kind of depends for me where it is in the cycle, but you can be having you could just have a mental stop of like, hey, like I'm gonna see how this candlestick develops and then see what the next candlestick does, like in the sense of like, okay, it prints a big bullish candlestick, but is that it? Is it just gonna do this and fall over, right? The problem is, again, you risk, though, that, okay, this candlestick finishes forming, you put your stop above it, and technically, I think if you put your stop above the high of this candlestick, it would have got knocked out. So, like,
Yeah, if you're doing it one tick.
yeah, and you're just leaving, again, a lot of risk. First is, like, it could just do this, and then, like we just looked at, it could just print another huge bullish candlestick. And then you're like, oh, shit, there goes my trade.
Yeah. I mean, this is obviously content I haven't watched or gone into on your course, but when you're managing it down like you're talking about there, how much wiggle room are you giving it off of an individual candle? Is it just like one tick and you're done, or is it like, okay, 3 ticks or 2 ticks?
I just do one tick off the high. I mean, like it's especially in this size of a market, it's not gonna make a difference most likely.
Yeah.
Like
it's just moving.
Yeah, like
so
you could have
significantly.
it here, like you could have it like, oh, at the open of this candlestick, but it's just like if it gets up here, it's probably gonna, just blip you out. I just do one tick above the high because it's just like, okay, that's just like a break of the candlestick and it's just like a logical spot. But I think, 3 ticks are like, oh, at the high of the candlestick, like I don't think
A
it's
little
gonna
bit of
make a
personal
difference.
preference.
Yeah, but again, like I don't think it's gonna make a big difference. Like if it's gonna break it, it's gonna break it. And like you could get lucky once in a blue moon where oh, like here, if I had mine one tick above the candlestick, it would have got knocked out. But if you had yours 3 ticks, you would have been fine. Like
Yeah.
that's gonna happen.
which is roughly what happened there.
Yeah, and it's like, okay, well that plays out once in a blue moon, but then like the other 80 times where you just take more of a loss, on the 3 extra ticks or 2 extra ticks.
Yeah, that makes sense.
Do you want to talk about Friday, this just choppy day real quick? Because it was kind of crazy.
I do. Give me a couple minutes though. Yeah, I'll be back in like 3 or 4 minutes.
Okay.
Okay. Yeah, one of the things I had down on my notes for this day, at the beginning of the day, and you're starting to trade, how do you think about the overnight highs and lows? Because I've seen you reference them a couple of times in your like morning summary and levels setting. Are they just kind of like a point of interest? Is there kind of like a common behavior for the market around them?
Looking at a 15-minute chart of this day is when the market opens up like here, kind of in the middle, it's the major lows down here, the next major resistance here, and the highs are all the way up here. I like to look at them as like here's all like, I mean, this day is just kind of shitty. Like we're just kind of in this, I think what I was looking at in this day was like, okay, there's maybe a down, I'm trying to look at like, okay, maybe there's a downwards support zone here. Like the market's clearly trending in some funky direction. And so I think when the market let's see, 9:30 right here, like it basically opens up here. I'm thinking, well, okay, well there's also like kind of 2 swings right here. Maybe I can draw a resistance level here off of these highs. But like they're just minor. And then here you can definitely start to make like kind of a support zone.
Yeah.
I think of them as like they're not a major zone because it's from just literally overnight action. It's not like the market's been bouncing along it for multiple days like we had up here,
Yeah.
right?
Yeah.
So yeah, it's like it's the first point of defense. Like so those are these are those zones, and then looking at a 1 minute chart, okay, the market opens here. I'm thinking, okay, well if the market's opening here and this is kind of an interesting high, especially extreme, so you will have times where it's like even if it's a small zone and like the market's going to move a lot throughout the day, it's a spot where the market could come up here and break this and then trend down for the rest of the day. So it's almost like they're good entry spots for potential reversals to where, the market just tests it and is like, nope, we're bearish today, or nope, we're bullish today, and we're going to push up higher. And you can, get in the lows and capture the move of the day versus, otherwise there's just nothing to look at. It's kind of hard when it's like, oh, well, what about this level right here or this level, and this this zone kind of lines up with that. And you can also even say like, well, this high actually, if you draw it, lines up with the close of yesterday, our white line here. So it's like, again, it's like try not to read into like, oh, how many of these do I take, but also seeing, okay, well, this is a potential spot for that. With that in mind, you need everything else to line up to take a trade too. Like I need it to just flush down into here, do a double bottom or some kind of like retest or attempt to break lower that fails, versus it bottoming here and then me just being like, okay, well, here we're at the support, I'm just going to buy in blindly and capture like a V bottom, which is, kind of what it ended up doing, right? Because it breaks here, but then it immediately just like, okay, I can't do anything with that. That's not tradable.
Yeah.
Like if you get in here, like the move's already basically halfway done. Like your risk reward is horrible. You get down here, it's like that's just a gamble.
You have no idea,
So it's like I would have taken a long here if it did like the second bottom and then made it better, but
kind of reinforced the signal that level had some additional strength to it.
Versus like this candlestick was also like 20 points, which is big, and then it comes up here and it's like, okay, well, what about if it decides to do that on the flip side? Like it could, because this was a crazy move. I could see this move getting reversed, even though it's like, well, it gave this move back up. This was so crazy, like it totally could, but then it just did the same thing. Like it just went down in two massive bars, and then here it basically started bouncing off the middle of the range. Which to me is like a big chop signal. Or a thought is it's basically a 50% pullback of this move. If I draw this as just a Fibonacci tool and take the low and take this high, halfway between them is here. And so it's bouncing off 50%, basically a 50% pullback of this move up. It pulls back 50%. That's as well as another thing that's like a very good indicator of a potential healthy pullback spot. And so that was just another spot. Like, you can just do that in your head. It'd be like, oh, well, this is kind of, halfway between these two. It's
roughly
somewhere there.
Middle,
and so, especially with just how it was like so funky like that, in my mind, I've seen this so many times. I just immediately went to, especially with how the overnight action was, it was choppy. And then the pre-market action where it started moving a little bit more, it was choppy. This is just larger chop. And so my thought was like, okay, it's probably just going to go into chop. And I think here, or like, I don't know, after this candlestick, I don't remember. I called it pretty quick.
You called it.
This isn't going anywhere.
You're like, I'm done. Have a good weekend. Bye.
Everyone just stayed around for a little bit longer, but you can see it pretty much just did that.
I think somewhere in here I was drawing kind of this type of thing.
Wedge.
And I was like, oh, that's cool. I haven't seen something like that before. And then, of course, you have the thought of like, well, it seems like it's moving in on like, it can't decide which direction it wants to go. Is it going to hit that and then shoot out in one direction? Like
do a big breakout and just like, okay, now it's going to keep going. That's a big thing that I don't use. I usually just am like, oh, it's in a wedge. That means it's choppy, because so often that, you think, oh, it's going to break this imaginary line I'm making in my head, and then it's going to just explode out of nowhere. And it sounds ridiculous when you say it, but like that's how a lot of people trade. And well, that's how I trade too in a lot of ways. But like to me, it's like it's
it's choppy here, and so why would it change?
You use real imaginary lines, Riley.
Yeah, mine are the correct.
But yeah, then I think I saw do that, and it comes back and kind of crosses out the tip of the wedge. I was like,
Mhm.
all right,
Okay,
I'm
it's
done
just
as well.
chopping. And it's like it does eventually go somewhere, but like,
It
like
slowly trends up, but yeah.
yeah, like often I'll just be like, okay, it's just gonna if it does break this, it might just slowly chug away, right? But like again, like sticking to our strategy, yeah, like it slowly trends throughout the day, and like if you did buy here and somehow held, like you would have got a big move. It would have taken you hours, which would have been excruciating if you held through all these volatile pullbacks, which probably not. It's yeah, it's like it's we're sticking to this first 30 minutes, and if it doesn't do what we want, you just move on. Like that's at the end of the day, right? Like that's for me like why I left so early here, because in my experience when it starts doing this and I'm seeing that it's choppy, for me to like even consider a trade, it would somehow have to do a huge move in one direction and then hit a level and make a clean double bottom. But like at that point it would be too late in the day. Like the timing and just for my like morning quick reversal move, it's like it's just not gonna happen. And so
Yeah.
I just, as soon as I can tell that that's the case, I'm just gonna move on. Like there's no point in being like, well, I'm gonna wait till 10 o'clock or 10:05, because that's when I'm gonna stop and when I can take trades at that time if it sets up. But like you can tell right here that that's not gonna happen today. And so it's like,
Yeah.
why waste time watching paint dry?
I also think it's really easy to like looking at this and then seeing it kind of shoot out the one side or then trend upwards to be like,
Mm-hmm.
oh, hey, it did that one thing last time. So next time I see something like that, I'll try and take a trade off of that thing that I saw one time. Like it
Mm-hmm.
feels really, really easy to put in trades at work and make decisions for like, oh, hey, last time I saw it do this, it did that, and just try and do that off of something like this, even though it has like no statistical relevance or like,
Yeah.
does that make sense?
Yeah, I mean, I think that's just at the end of the day, the constant fight you have to do, especially when you start out, of your brain just wanting to overcomplicate and add more things.
Yeah.
And, that's so confirmation bias of like, oh, well, I saw it,
Yeah.
like, especially here, it's like, oh, well, the market did a crazy bottom here. If I bought at this low, I would have made 4x in 3 minutes. Like what a rush would that be? Like that would have been crazy. I've never had a trade like that. And it's like, you go and do it and the market just, instead it just like pops up here
Fucking
and then
keeps
keeps
going
going
down, yeah.
lower. Like
Yeah.
it's always one of those things of like it's always going to do if you're trying to trade like that, it's always going to do the opposite. And that's I think how you get those times where people are like, "Oh, my win rate is like if I just reverse my trades and trade the opposite of what I think, I would actually make money." And it's like that's cuz you're trading like that.
Yeah, you're flipping coins.
Yeah, and doing it in like a weird emotional way that somehow has a very good way of consistently losing.
Sticking to the very defined time limit or the limited time limit of like, okay, you're trading for an hour and a half or whatever, all said
Yeah.
and done, of sticking to that or being like, oh, it's doesn't look like it's setting up. Okay, I'll call it. But
Mhm.
having such a defined time limit helps so much to like stay focused and be able to stick to trying to do one pattern and looking for one set of things to stick like to set up. Because I think if I was trying to do this for way longer in the day, like 3 hours or 6 hours or whatever, I would just start to invent things for me to look for or to see just because you're doing it for so much longer.
Yeah, I think that's something that comes up into my mind when you say that is you're instead of approaching it like you're trying to make money, you're approaching it like you're trying to execute a specific strategy. And so you're not even like focused on the money in the sense is your whole focus of trading, which is how it should be. Like your whole focus of trading should be how I can be process focused and execute my specific strategy and not about the money. Like it's not about, oh, if I, because otherwise if you focus on the money, it's so easy to be like, oh, well, I would have made money today if I bought here or did this or did that. And, the next day that doesn't work. Versus, like this, it's like I am focusing on executing a specific strategy. I don't know when it's going to show up, but when it does, I consistently make money.
It's like a bonus thing. It's like instead of being like, okay, I have to make money off of this, I am looking for this and trying to make money every day off of this. It is a like, all right, I'm just waking up an hour and a half earlier than I would have normally waken up, and I'll see if this thing shows up. And if it shows up, I get a nice bonus and some extra money. But if it doesn't, like, oh well, I just move on with my day like I normally would.
Yeah.
And thinking of it as like, oh, it's a nice thing that appeared versus like, I'm grinding to try and get this to work.
Yeah, because that like just puts, again, puts pressure on you to find trades, and trying to force trades doesn't work. Yeah, I mean, I would say like thinking about this last week, like this is, pretty, I would say pretty typical of trying to, just zooming this on a 5 minute to like make it easier to scroll through. But like, Friday, it was just choppy. There's nothing. The next day, Thursday, it's like the market opened up here and just went lower a tiny bit, chopped, and then just puked. And so no trade that day either.
Yeah.
And
I
then
saw that and I was wondering if there was some. Oh, I guess. Wait. On that chart, it looked really good on the 5 minute.
on the 5 minute, I wouldn't say there was a way to get in on this.
Yeah, in some ways I was looking at it and I was thinking about the setup from the day before.
Yeah, I
Of
can
like,
see that. It kind of opened, sold off a little bit, and then made some kind of like lower high here, and then just puked.
yeah.
I mean, in a way, that's very similar to the day before. Yeah.
And I think maybe it was in my mind because the day before we'd seen something like that where
Yeah.
it kind of like it almost looks like it has a like I don't know what is that 8:30 or so comes and forms forms that little top and then kind of retests it and then
Yeah.
starts dropping off and then has that
Keeps
shoulder
lower.
there.
I would say the biggest thing of why I didn't even think about that here is just scrolling out. It's in the middle of the range. Like if you just drag these
Yeah,
across, it's just in the center of the range. And why would it not just continue doing this,
One of my questions was like, was there something there or was there a way to get into this? Because it has like part of the setups, but also
Yeah.
like it wasn't really at an actual zone.
Yeah, and that's why it's like, that's definitely a dangerous part of trading of like hindsight. It's like you start to think, oh, how could I have caught that? But that would then put you at the risk of like, okay, well, I'm going to take trades in the middle of the range away from, the number one step in our strategy is you're skipping step one, which is like the most important step. And then that would just if you skip that step, opens the door for so many like bad spots. And, the once in a blue moon where you get this crazy move out of nowhere. Yeah.
Yeah.
So, yeah, no trade that day. And then the day before was like a good trade. And then the day before that, it was a chop fest as well, which I would say is a pretty standard week of like having one or two trades at the most, just because of, there's so many other options for the market to do. And a lot of the times it likes to chop.
Yeah, there's a lot of behaviors and it's got to cycle through them. Like,
Yeah. And then it has to, even if it does something that like a good move, it has to line up with our other things. And, that's kind of just how the strategy works. And, you're not going to make money every day, but the idea is over time, you're going to make money. Even if it's
Yeah.
like, okay, you don't take a trade for a week.
the key thing always seems like it's not about taking more trades. It's just about making sure the ones you're taking are correct, and then you can scale up those trades.
Yeah. Yeah, because it's like, oh, if you take one trade a month, but you make $10,000 on the one trade, like, that's pretty good.
Who gives a fuck?
Yeah, well, who cares how many, like, it might be hard to sit there that long, but, like, at the end of the day, you're here to make money, and if you make the money,
Yeah.
who cares how you do it?
Yeah, yeah,
Yeah.
yeah. That's such an important thing. It's that like mindset of it's as long as the one thing happens and you can capitalize on that one
Yeah.
thing, you don't need to be focusing on like, oh, I need to make X number of trades an hour.
Yeah.
There's no like hourly rate.
No, and I mean,
thought
like,
process
sure,
with
maybe
this.
you could make the, like, you could calculate that for fun eventually, but, like, at the end of the day, it's like, and that's the hardest part about, I think, when you start out, is if you wait a whole week to take one trade and you make $100 on that trade, you're starting to think, oh, well, I just spent all that time and I made $100. Like, especially if you traded like 5 hours a day or something, or you
Yeah.
watched for 5 hours a day. It's like, well, that's one reason why I like to do it short and sweet, because it's like quite often if it's choppy in the first 30 minutes, it's gonna be crappy the rest of the day.
Yeah.
And so, like, it saves you that heartache too, but just try not to think about it as the money initially and just focusing
Yeah.
on the process. And again, like, in your mind, just think about, well, if I made $100 doing this, just adding 2 zeros is just a matter of time.
Yeah.
And obviously, like, that'll take a while because scaling up slowly to get there takes a while. But, like, it just takes time to get there. And, the strategy at bottom line is, like, if you can make $100, trading a strategy consistently, you can make $10,000 trading a strategy consistently.